And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, looking at the charts, the economic data, corporate information, earnings reports, commodities, you name it, anything important, relevant to the financial markets to help people better run their daily routine out there. And as you're coming into the show, as always, hashtag Team Tackle right in the chat. One thing I've been reminded lately of from a couple of our students saying, hey, Tim, you got to ask for the subscribe and the like. Make sure we get the word out. I'm going to continue to do that. If you are a veteran, I appreciate you guys giving those thumbs up as you come into the show each and every day. And if you are brand new to the channel, subscribe, click the bell, come back and join us on a daily basis. We go live every day. The markets are live, 12:30 Eastern. And it's Friday, guys. The markets are breaking out after a disappointing jobs report, actually, for the month of April. The Labor Department actually didn't show as many job gains as we thought they would have. We'll talk a little bit about that jobs data in a minute. But the S&P 500 pushing towards a new all-time high here. Pleasantries first. Frank, how are you doing today, sir?
Doing well. Always fun to be here. I felt like a little kid at Christmas today as I was scanning. I was finding things and their earnings were behind them. I was thinking, oh wow, this is what I'm talking about. This is why I'm always excited when earnings season's over. Lots of fun things out there. Nice breakout in the S&P, kind of breaking out on the Dow yesterday. So gotta love this market, right? This has been a nice week. Materials, whew, goodness gracious,
Yeah.
materials.
Well, materials have been hot, and there's no doubt about it. And we'll bring Matt in here in just 1 minute, Frank. But while we got you here first, what is your read on this chart on the S&P 500? You know that we've got up, breaking into a new all-time high. We took about 8 bars off pretty much as we were consolidating up there near the top. Doji, doji, doji. A few red candles. Fought an intraday support on Tuesday. This entire week could have a completely different narrative if 4,100 did get violated. Frank, we'd be talking into a retracement at that point,
Right.
probably near that rising 50-period moving average. Gold breaking out beautifully. The NASDAQ fighting its support level as well. But the S&P here now pushing into a high. What's your read on it technically?
I really like the way we've kind of come through this, right? We had a couple of tests of resistance, a test of support. We really got to see, are there buyers out there, right? How committed are they? Like you said on Tuesday, coming down into support. I mean, it's easy to look back now and say, sweet, we should have just bought it there. But at some point, that was a big red candle into that support, right? That was looking pretty grim there for a minute or two, firing back off of that support level, now pushing through the resistance. We know now that that is an important support level. So now I have a really good idea that I thought it was important when it was intraday on, earlier in the week. I know it's important now because we've tested it multiple times. And if that gives out, yeah, I should expect more of a retracement. I'm not expecting it to, of course. I'm going to go with the chart, but I have a lot of faith in the support level. Now I can say, yeah, you know what? This shouldn't go below here. Breaking above resistance, hitting an all-time high, as they say, it's a time to buy, I suppose. Don't necessarily have to buy the breakout on a Friday, but I think you have to like what you're seeing from a technical perspective, holding support, breaking resistance, really taking a few weeks to do it. So in its own weird way, a weird extended high base type of a deal, right? Definitely liking what I'm seeing from a technical point of view in the S&P.
Let's bring Matt in here next as well. And Matt, pleasantries first. How you doing on a Friday morning here?
Tim, doing very well. Excited to be here with the crew to break down the action here today. No doubt about that. And some pretty good little price action coming into the end of the week. And quite frankly, I love this breakout here coming into the on a Friday, not on a Wednesday. I love that breakout because it gives the market a couple days to really kind of understand what's going on in the market. It gives the market a Sunday futures market to really solidify the $4,200 level as a breakout. You could see a little bit of a test of that level just to ensure that this pattern is solidified. Very similar to what Frank was talking about as the market came down on Tuesday, really smacking into that 4120 support level from an intraday perspective, confirming that as a support level. You saw the defensive nature of the response on Tuesday when the market just recovered most of that initial drop on, and again, it wasn't cash open, it wasn't futures, it wasn't economic reports. If you'll remember, it was the technical trigger underneath intraday during a very light session on the overnight action that drove the market down. It found support. Real good price action, real consistent price action since then. And now you're talking about on a Friday coming into a A fairly important week, and obviously we're now into the back of earnings. We're not even in the middle of earnings. We're coming to the conclusion of earnings, and it's been, a lot of earnings has been, hey, listen, we did a lot of good price appreciation coming into earnings. I know these earnings reports have been fantastic, but it's really kind of just justifying the previous price movement is what it's really doing, and it really gives traders that go ahead to a certain extent to do it again. And so now that we're coming into the not even the back half, but towards the tail end of earnings have been very, very, very good. Not necessarily the response. I'm talking about the raw numbers from an earnings perspective. Now we're looking at this market technically, and you've got now what, 3 weeks of consolidation, very tight range consolidation. You really don't have, like we were talking about in the NASDAQ, you really don't have this up and down nature of the pattern where you have pivot confirmation creating more of an M formation than a simple consolidation. And there's not a lot of difference, but there is a subtle difference in when you do have pivot confirmation. It's tight range, but it doesn't surprise me when you do have this type of pivot confirmation for any chart. Obviously we're looking at the NASDAQ, but for any chart to eventually violate that support level, it did. It found its foundation right there at that 13,400 level, right north of the 50-day moving average. But the NASDAQ's very choppy right now. The NASDAQ's got a lot to overcome, both from a perspective by the market participants, but also from a technical perspective. When you violate support, it's just going to have so much to fight back up above. Whereas when you're looking at the markets that held their support levels on Tuesday, look at the Dow Jones. It held its range, it held its consolidation, and then it broke out and ran. Whereas you're talking about the NASDAQ recovering, being choppy, it's fighting through a lot of resistance levels. That's what happens when you violate support versus holding support. The chart, when you hold support, is so much cleaner, so much easier to see price appreciation on charts that hold those support levels. And when you're looking at those two charts in the indexes, you're talking about the Dow Jones and you're talking about the S&P 500. And whereas the Dow Jones, which is, has a lot of that economy reopening, vaccine distribution, cyclical type stocks in it, and obviously it's got that industrial type edge that, say, the S&P doesn't have, broke out on Wednesday, continued throughout the rest of the week, strength on strength. Nobody wants to sell in the Dow, and the S&P confirming a breakout here today. We got to confirm above that 4,200 level. We're currently pinging at 4,221, and we're going to come into the close, and you could see some profit taking in a retest of that 4,200. But you got to come into this week saying we're coming into the back half of earnings. Earnings have been very, very good from a raw numbers perspective, and now the markets are breaking out after 2.5, 3 weeks of consolidation. You got to like this from a technical perspective, specifically in the Dow and specifically in the S&P. When you're looking at the two other indexes, the NASDAQ, there's going to be a battle here. This is where the growth is. There's going to be a battle here, and you got to know that if you're going to participate in the NASDAQ. And I'm not saying don't. I'm just saying if you are going to participate in the NASDAQ components, understand there is that battle there. No doubt about that. We don't have that battle in the S&P right now. We don't have that battle in the Dow Jones right now. Those two areas in the market seem a little bit easier than the NASDAQ, and it seems a little bit easier than what we're seeing in the Russell 2000, which just some of these stocks in the underbelly of the market are in the Russell 2000, and quite frankly, they've been blasted. So you've had a lot of separation in the Russell 2000. This is not an index that you're seeing an index neutral. Go look at the 2,000 stocks in the Russell 2000. You're not going to see 2,000 stocks doing what the Russell's doing. You're going to see half of them doing good, half of them getting absolutely blasted, a lot of separation. And so the neutrality in the Russell 2000 really doesn't tell the story of what is actually happening in the Russell 2000. Tough market in the Russell 2000, not so much in the S&P, not so much in the Dow. That's where our eyes should gravitate, is to the areas of the market that are simply a little bit easier right now. And right now, that is the S&P and the Dow Jones.
Mhm. It's a really, really good point because in those individual components, and I know, Matt, you always do bottom up analysis towards the weekend as you're doing your scanning, things like that. It's a part of your process. The individual stocks within that index, there's a lot of them that are absolute dogs, a lot of them that were absolute juggernauts, kind of tug of war. Yeah.
Before I rank the financial sector and finalize the ranking on the financial sector, I promise you, not just me, but multiple coaches at Tackle Trading will look at every individual component in that sector before they truly understand what's happening in the sector. Because you look at the ETF to get the broad perspective, but the broad perspective doesn't not necessarily mean that is what is happening and transpiring in this sector. Sometimes you see one or two stocks just do amazing things and carry the entire sector. Sometimes you see a massive separation, and sometimes you see every stock doing the exact same thing. But you don't know until you actually dive in and look at the bank stocks, look at the brokerage, look at those big money center banks, look at the regional banks. It's the same thing in energy. Sometimes you see EP exploration type companies and the oil and gas type companies and the drill baby drill companies doing amazing things in the energy space. And sometimes you see the companies like not Schlumberger, but Tesoro and Phillips 66 and Valero, the refinery companies start doing amazing things. So from a bottom up approach or a top down, you can kind of do it similar. But yeah, when you're going through and trying to understand what is truly happening in the sector, I do think it helps to look at the data within the sector.
Absolutely. And we're going to actually take a peek at some of the sectors a little bit later in the show. I do want to get your take on one thing though, Matt, because you mentioned something about being at the back half of earnings. I mean, it feels like we're actually kind of done with earnings season in many ways because the key components like you detailed last week and the week before, the Apples, the Googles, all that kind of stuff have finished. This week, there were 130 companies report still, but next week, there's only 37 companies that are large cap or higher that report earnings next week. Now there's big names, Alibaba, Disney, there's a couple of big ones, but we're pretty much wrapping this thing up.
Well, and Alibaba is a big name, but it's not an S&P 500 component. It's not a Dow component. It's not a component of anything really. So, when you're looking at the S&P and when I'm tracking earnings from a broad perspective, I'm looking at S&P 500. There's a lot of stocks out there you want to track, and obviously in earnings roundup, we talk about stocks that are not in the indexes because they might be popular trading names, right? But typically what I like to look at is kind of the S&P. And last week you were rocking about 140, the week before 170, and obviously the week before you were talking those big names. This week, you're talking a lot of names that aren't as popular brand names. Next week, there's 15 S&P 500 components. So when Frank's doing his scanning and he's not seeing a lot of those blue icons, Frankie, right? We're not seeing a lot of those blue icons. For a technical trader like a Coach Frank or a technical trader like a trader like a Coach Tyler, they're going to see this environment as a beautiful environment because not only are you post earnings, you're post earnings with a clean technical trigger on the S&P and on the Dow Jones. And that is typically a really good moment to be in the market, given the fact that when we do have multiple time frames aligned, not all the time do we see a nice little true leg up like we saw here, but that is the zone of analysis where you could see something like that. Typically a really good time to be a part of the market. And obviously the euphoria out there is still greed on greed. So it's a good time to be in the market.
Well, and even to that point, even Coach Tyler the other day was giddy, saying he loves the way the technical patterns are shaping up because of the strength. Giddy. He is usually giddy. I will give you that. Very, very positive dude. Happy to always be around a young Tyler because he does lift everybody up. But yeah, there's a lot of technical patterns.
When Tyler's 72 years old, Tim's going to be like, yeah, that young Tyler, he's fresh off the boat. He's just.
It's true. To be fair,
young anymore.
I was going to say. Grown man with 5 kids.
Dude, I call a lot of people young.
Anybody younger than us. A young up and comer, whippersnapper coming up here.
The Green Bay Packers got a young quarterback, Aaron Rodgers. I think he's only 37 years old. May not have him long.
Good call on that one. Good call on that one. I'm really bullish on Aaron Rodgers. It only took you 16 years. Okay. About the exact same time frame as Tyler. About only 16 years.
All right. Give me the intraday chart real quick here, Matt. I do want to get your read on something here this morning because I thought this was interesting following the jobs report at 6:30 a.m. my time, 8:30 Eastern pre-market. we saw different reactions out of some of the markets. You know, the NASDAQ actually took off after the weak jobs data, and the Dow actually kind of hesitated a little bit right after the weak jobs data. They've all started running on the cash open, but the Labor Department, and I'll give some of the numbers, they reported 266,000 new jobs. Frank, they were expecting 990,000 new jobs. The unemployment rate actually went up on the report instead of down that they were projecting to 5.9%. It's actually at 6.1. There's some detail in there about where the jobs are coming in. We can get into that in a minute. But Matt, did you think that there was anything from the market reaction to this data that grabbed your attention? Is there something here, or is it nothing to you?
Most labor market numbers in the past 9 months have been a nothing burger to me. And we are seeing some price response to the numbers today because we did get a radical miss, but it's a fascinating response, quite frankly. You know, and so I haven't personally dived into the detail of the data of the labor market numbers because I don't put a lot of emphasis on the labor market numbers in recent history. This one did pique my interest though, but I just haven't dove into the data. So I have a hard time giving an opinion on it, given the fact that the market did start moving on the actual numbers here. I did see a report that there are individuals blaming enhanced employment benefits for keeping people home. I think that's hot take.
That's a hot take.
That's a hot take. That's a hot take without thought or evidence or confirmation in any capacity. We don't know yet. And those enhanced benefits have been around for 9 months now, and labor market numbers have been improving radically month after month after month. So I just think that hot take should stay in the drawer a little bit until we see some evidence more than just one data point. But the one data point does pique my interest to see, to maybe bring back labor market numbers more into the analysis, because quite frankly, Tim, it has not mattered at all in the last 9 months.
Yeah, I mean, leisure and hospitality were the sector that got the biggest uptick, but we saw that in March as well. They also made revisions to the February and March data. So it's, to me, honestly, quite bluntly, I feel like this is going to get revised upward next month anyway.
I think I feel you're going to have a massive revision next month. And I also feel like the labor market numbers don't represent the labor market in any capacity right now or in the last 9 months. I think the labor market is a very, very difficult beast to really kind of understand. And so any hot take today is truly just a hot take. It's full of hot air, and that's it. We don't know. This is really the first time for me anyways. This is the first time in the last in the previous history of analyzing data that I've been interested in labor market numbers. But it's more, my interest is more in the disconnect to what happened in the labor market numbers to where the price response was today. That was a pretty nasty miss. And the unemployment report actually went from 5.8 to 6.1 on that miss. They were expecting close to 1 million jobs. It came in less than 300,000. So I'd like to understand the price response here, what is happening in the labor market numbers, because and again, I can just give you my quick hot take. I think there's something underneath we need to understand before we, say this is a terrible report and we don't understand the price response. I think we need to dive into the report and truly understand if this is something that's going to impact the market, because again, labor market numbers have not mattered to this market in any capacity. It's been literally probably the 15th most important report that I analyze on a monthly basis, whereas from 2010 to 2018, it was 2 or number 3 in the most important economic reports. I would always put the central bank 1A, 1B, 1C, 1D, 1E, 1F, and I'll go all the way to Z on the central bank. But right after that is inflationary and labor market data. And again, why is it right after that? Because labor market data and inflationary data impact the central bank thinking. And so it's been a very important form of analysis. It just hasn't been in the pandemic recovery. And so if it's going to start becoming more important analysis, then obviously we're going to be talking about these labor market numbers more when these reports come out. But as of right now, you got a bullish response and a volatile response to some really weak data. And I think there is some disconnect with those numbers, quite frankly.
Yeah, yeah, it is the most interesting jobs number
You don't
data
see
that I've seen in a
you
while.
just don't see those misses like that.
Yeah.
Like we just don't see we see misses like that in EIA numbers. That's
Correct.
That's it. In fact, the first thought I had this morning, Tim, when I saw the numbers was, well, did they hire the EIA analysis? Like,
Or is this a typo, right? Something.
like, are we missing a zero here? Like, I mean, what's going on? So obviously, very fascinating price response to the data, but again, we just haven't been seeing this. So
Yeah.
I need to dive into the report to understand a little bit more.
Well, and frankly, it wasn't just equities that got the nice price response. Commodities too. I mean, the
and
treasury
tackle
market moved. Yeah.
Yeah, and I just want to remind Tackle, I'm not going to give you an opinion unless I truly have spent the time to understand what's happening in these numbers.
Mm-hmm.
And so just give me the weekend to understand if this is a nothing burger or something we need to start understanding.
No, we need an immediate response and quick
Hot
take on
take,
everything at all times.
Hot take.
It doesn't
You know what?
matter.
$300 of enhanced unemployment benefits has really had an impact this week that we just haven't seen. But you know what? No, I'm not going to give a hot take.
I think the interesting part was the price responses in the assets. And now we're going to have to dig into the data to figure out what it means, whether it's a one-off or they're going to get revisions. We don't know, but we'll keep looking at it. Let's go back to commodities though. And actually one thing I did want to do today, Matt, was go through the sectors. You want to do a quick sector roundup now while we're talking stocks?
Let's take a quick peek at the sectors here. And obviously, you know, the coaches of tackle trading on every Friday, we do the scatter report meeting where we get our scatter reports dialed in and analyze all the stocks out there in the marketplace. But we also, go through the major market indexes and the sectors to kind of, rank those from a scoreboard perspective. And if you don't understand how we rank things, definitely go dive into the Tackle newsletter on a weekly basis. We do that for the market indexes and the sectors in the newsletter. In the commodity report, we rank all the commodities, and in the currency report, we do rank all the currencies. So check those reports for finalized rankings. And honestly, my favorite 3 hours of every single week is the moment the market closes and all the coaches of tackle train just get to hang out, talk shop, geek out on the week, prepare for next week. It's just, I truly do enjoy those hours I get with the coaches. And so, we're gonna talk about these sectors, and you're probably going to see some upgrades this week with a nice breakout in the S&P and a nice breakout in the Dow. Finance looking here is just the continuation of the trend, the continuation of this movement. And so this week you're seeing the continuation of the previous breakout here, consolidating towards the top end of the channel, a little bit overextended here. Most likely would like to see a couple more days of consolidation. I know Coach Frank likes to say, put it in the cooker, right, Frank?
Yep.
Put it in the cooker, line that support level up right there. Resistance level. Line that resistance level up. Give us a clean trigger. But you are a little bit overextended on the daily chart. You're overextended just slightly on the weekly chart, as well as you've driven well above that 90 MA on the weekly chart. So good price action in the financial sector. Good response to post earnings. Remember, earnings is over here. Remember bank earnings, guys.
Mm-hmm.
Okay, and I'm not saying this is going to be the S&P, but remember this. Bank earnings were here. Bank earnings up, down, up, down, up, down, up, down. Throughout all of bank earnings, we did not see the massive price appreciation. What did we see? We saw Goldman Sachs do this little number, right? That's what we saw. We saw Goldman Sachs do that number. A little bit of consolidation, a little bit of volatility. After all the banks got done reporting earnings in this, that was the price response following all of the earnings, which were very good coming out of the banks. Again, coming back to the S&P, that consolidation. What did we see throughout that entire consolidation? Just great numbers, justification of price action. We're now getting to the tail end, and now you're starting to see that price response there. And so when you're looking at the financial sector here, you are a little range up, a little bit overextended. The two sectors that really kind of I want to get Frank's take on here is real estate and utilities, Frank. We're seeing a little bit of shift in behavior in real estate. We're seeing a pivot change in utilities. What's your read on real estate from a violation of the 9 EMA, which has been driving this momentum of real estate? And then the secondary question on utilities, how do you see this little pivot confirmation from a utility perspective?
I think when you're looking at the REITs, you have a lot more reason to be optimistic. I think you nail it. We kind of broke below that 9 for the first time in quite a while, right? And generally speaking, the expectations are we've been riding the 9 for a while. Once that gives out, we're going to see somewhat of a deeper retracement, right? Whether that's to the 20 or beyond, it's hard to tell. What it really tells me is this is still a bullish retracement. We still are holding support. We're seeing a little upward movement, but that insane momentum or that strong momentum has been at least briefly halted, right? Through a little cold water on it. Certainly not bearish, right? But just a little less bullish than it was while we were riding through that 9. So I could look at somebody looking at real estate as a more traditional bullish retracement type of scenario and would be perfectly comfortable with that if that was the read that they were taking, as long as we hold the support level. I mean, hey, we had the 3-day pullback into the 20, little inside candle yesterday, upward movement here today. Utilities, on the other hand, I mean, they were very, very similar, in a lot of ways going into last week, where they had that more traditional, deeper pullback after giving away that 9 EMA momentum. Of course, we know how this one played out, right?
Yeah.
We made it about halfway to resistance, through into town. Now we've made that lower low, as you pointed out. So now utilities, they're back on the leave them alone, broadly speaking. There still are some pretty interesting utility charts I found today. I'm sure we'll talk about them this afternoon. But broadly speaking, it looks like the momentum has kind of pulled out of these areas, in particular on utilities. Doesn't mean it can't pick back up, and at some point it likely will. But whether or not that's in the short term, well, it's hard to believe that it's happening Monday, right? It could. I certainly don't know the future.
Well, looking at utilities, Frankie, we got a ranking of 25 on utilities. Obviously, you and I are most likely going to argue for a downgrade here on the utility space.
Agreed.
But you're still in bullish category simply because you have a short-term pivot problem, and you do have a short-term pivot problem. It's right there. You formed a lower high from that resistance level, and that confirmed with the follow through on the following 2 days. And so you are looking at neutrality from a short-term perspective, but looking at the weekly charts, you're still clinging on to that potential breakout at 67.5. And there are some utility charts that are still looking fairly decent out there.
There are.
And so it's going to be an interesting rating, but I do think utilities is going to get downgraded. And then when you look at the utility space, again, you're looking at this as a bullish retracement, and you're looking at this as a lower level of resistance at this point. And the reason you're looking at that as a lower level of resistance is because this pivot confirmation on the retracement. When you're looking at real estate, you don't have that same pattern coming into it. Utilities had a V-shaped type bullish retracement. You got a little bit of a consolidation, violation of the 9 EMA, and now you're looking to fight back up into that resistance. I could certainly see a lower high here as well. Let's go ahead and see it. I do not like this consolidation and then a violation, and it's not exactly the failed high base, but I would say this is a failed breakout at this point, right? And I don't call it a high base because of the fade action more than anything. It just, grind up. You do see that as a breakout. You see that as a fake out, and you see that as a violation of short-term support. And so I do think utilities is weaker than real estate, but I do not think it's that much weaker than real estate right now.
Yeah, I think when you're looking at these, it's really kind of the change in momentum, right? Much more. I mean, sure, there is short-term neutrality and a little weakness in utilities. I think you have to call it what it is, with lower highs and lower lows.
Yeah.
But it's really more about, okay, blah, you guys are boring again, until you're not, right? That's kind of my take on it, at least.
Well, utilities is boring until the one moment in time it's not. That one moment in time was here. Now it's not. It's back to being utilities, and that's perfectly fine for the utility space. Let's talk a little bit about energy here, Tim. I want to get your take on energy very quickly. We're now through a lot of the earnings reports. We saw ExxonMobil, we saw Chevron last week, we saw Conoco this week. We got through the European counterparts the week before, and again, very similar to the financial space. Earnings is all right here. Once you get through, you start to see that type of price appreciation saying, yeah, we're through it. Let's party again, right? We're through it. Let's get it on. What's your take here as we fight up against this potential breakout? And when you look at this on a weekly chart, you can see that breakout a little bit more clean right there at about 53.5 by 50, top shelf about 54. You got a lot of momentum coming into it, not a lot of volume to support it though. What's your take? Last week we had the energy space ranked right there at the positive 35. This week we're through earnings. This week price appreciation. This week fighting against a breakout. Little overextended on the daily though. What's your take, Tim?
We're fighting up into some very, very key resistance levels, no question about it. But I actually believe over time we're going to continue to price appreciate. I'm bullish on the sector, not just for this week or this month. I'm bullish for the economy reopening theme that we've been seeing in the rotation trade since the election. Quite frankly, crude stabilized up here. I was looking at the energy components. I mean, I own Pioneer Natural Resources and ExxonMobil. Those are two of my holdings. I've got some of their trades in energy, but I don't have anything bearish in energy. And quite frankly, fighting off of that daily consolidation, building it back in here, I think you've got opportunity in some of these areas. There's a lot of great charts. ExxonMobil now pushing towards its pivot point. Chevron made a nice recovery. But even outside of that, you had like EOG breaking into new highs. You have a bunch of strength within the sector, in my opinion. Like, look at that EOG chart real quick, Matt. Up 7% here today, pushing into that 200 weekly moving average. So you've got mostly strength, in my opinion. But you do have to acknowledge on those weekly charts, we're going to be fighting into some old chop or old levels that are there. They do exist on the chart. So you got to at least process that and think through that part of it.
No, I agree too, and I do think you're looking at an upgrade here in the energy space. I'll give Coach Frank's take on it here in just one second, but I just want to remind people the entire argument that we've had for the energy space over the last, it now feels like 4 or 5 months, I would say, is that the energy space, as oil goes up, and me and Coach Mark have talked a lot about this on the halftime report, as oil continues to see a higher quarterly price threshold on oil itself, on crude oil, that's going to have a fundamental impact on the earnings numbers within the energy space. And it's the energy space that will eventually catch up to what was front run in the crude space. And just visually speaking, and I just wanted to say that because visually, when you're looking at crude, you're seeing crude above its 200-day moving average, has recovered its pandemic price, which was really around that $50 range. We're currently around 65. Crude's been very, very good, very, very consistent. But again, we're back up within the normal ranges of crude behavior that was typical before the pandemic. When you're looking at the energy space itself, we have yet to do that. We're still underneath the 200-day moving average. This is kind of the pandemic low price here. We have yet to recover the pandemic low price, although we're close. So the argument is basically crude oil is one leg, and one leg is an important analysis in front of the energy space. We believe that energy will catch up to crude, and we're starting to see that now post earnings. So it's playing out, and it just feels good when it plays out the way you identify. So we'll see if it can break out, and we'll see if we can get that run up to that 200-day moving average. But it does look positive. Frank, what's your technical read on the energy space as we approach these fairly important resistance levels?
Yeah, I think you sum it up really nicely. I expect that we're going to continue to see price appreciation. I think the 200 weekly is the next real challenge to be watching out for. If I'm in energy stocks, I'm very, very happy. If I'm looking to add something, I probably want to see, just even a couple of bars up here in consolidation or a little drift back into the 9, creating a little bit of a cup and handle pattern. We have run pretty hot and heavy into resistance, right? It's been a really good 2 weeks for the energy stocks, which is great for the things that we own. We're never going to complain about that. When we're thinking about a new entry point, it probably would be healthy to see just a little break. It doesn't, hey, I would love it to be a 2-week consolidation and then break out.
I was going to say, you want 5 dojis.
But even a 2-day, even if we could just get, a couple of, early next week, hesitate at that resistance, give these folks who bought in 2 weeks ago an opportunity to lock in some of those profits, see how we react at that resistance. I'm not particularly afraid of this resistance, but I will recognize last time we were here, we got slapped. We got to respect it, right? So taking a little break here before the breakout would be preferable, by my take at least. A break on Monday would still be a break though, right? It would be just probably more of a momentum style that I'd be looking at if we break early without taking somewhat of a breather, whether it's a shallow pullback or a bit of a consolidation. It would be momentum style, I think, if we took out that resistance, say Monday morning.
Well, and if you look at the trajectory of my line here, look at the momentum here, look at the momentum coming into that breakout. Okay, just take a look at this. Okay, look at the ting there, got beat back down. Look at the ting there, got beat back down. Look at the momentum here. Now, see that? See that? Look at the momentum here. Look at the price action here. Look at the price action here. What Frank is talking about is just getting a little bit of consolidation.
That's all I asked for.
That's all he's talking about. What Frank is saying is he's saying, I like this momentum. I love it, but I'll love it after consolidation. And so when you're looking at crude here, you see that very similar momentum coming into that very similar resistance breakout that beat up energy stocks last time. What Frank is saying, and correctly, rightly so, give us a little bit of hesitation. Give us that Allen Iverson hesitation, 2-step crossover, and then just celebrate that breakout of 54. So I'm with you, Frank. I like this space coming into it. I like the price action coming into it. I like what Exxon did. I like what Chevron did. I like what Conoco did. EOG, not as much, Tim. I didn't think they had as strong as report, but I like their price response just as much. Just as much. So you got to like the space. It's certainly hot. And we got momentum here coming into that breakout. Very similar momentum. And again, what Frank is talking about is this hesitation here. It's tough to trigger as you're overextend like that. But just a little bit of hesitation. Line up that breakout and then look what transpires. I'm not looking for a breakout that runs to 56 here because it's overextended and we have to deal with the snap back to 54. Right. I want to see that consolidation, high base, and then just ram 54 to where we see 60. And that's what Frank's talking about.
Beautiful.
Yeah. And so, just got to be a little patient and be prepared, right? I mean, there are going to be individual candidates out there that might not be so extended that can have pretty interesting setups. If we do just fire right through resistance, there's going to be lots of options if we can just spend a few days at resistance, right?
And again, I know a lot of the coaches, I know a lot of the community are hot and heavy in energy right now. So even if we don't get that hesitation, you're going to celebrate it because your positions
exactly.
work out.
Exactly.
What we're talking about is that beautiful new swing trading entry where you just have the heavens and earths align from a multiple time frame perspective, and the analysis gets easy at that point from a trading perspective.
Yep.
Yeah, new entries versus existing positions going to change your mindset.
It's just a different form of analysis is all.
Sure, absolutely. Any other sectors we want to take a peek at?
Yeah, let's take a look at some of the aggressive sectors here. I do want to get Frank's take on the technology space, the discretionary space, and then obviously the communication space. But let's first start with technology here, Frankie. The technology space, we actually downgraded last week coming into this, and this is the importance of technical analysis for us, ladies and gentlemen. When we're sitting here last Friday, right? We're sitting here literally last Friday, right here. And Frank and I, right here. Okay. Frank and I are usually, we get online for the last hour of the trading day before the rest of the coaches join us. and we just talk shop, we talk technicals, we do some scanning. Frank and I are very similar traders from a technical perspective, and so I think it does us both good to get the take of the other one, right? To kind of solidify what we're seeing. And so we like to get on and in that hour, we like to geek out on a lot of other conversations as well. But we're sitting there staring, right? We're sitting there staring at this 140 level. Okay. And when you're looking at this on an hourly chart, you're like, okay, so what? It's 140. Who cares? Well, when you give the backdrop of the importance of that 140 level from a daily price action perspective, look at that 140, 140, 140. We were seeing some heat coming into that 140 last week, if you guys will recall. And literally last week, we're just sitting here looking at that market and we're saying, okay, if you stay above 140, we're not gonna downrank you. We know 140 is important to you. We get that, right? We're not going to downrank you. Boom. And I remember even taking a stab. Like I took a pull on like right here before the break. I was like, all right, 140 is the number, over under, guys. And every coach took, and I think me and another coach were the only ones who said over 140. Everybody else was like, you got heat coming into 140. I'm like, I'm just playing contrarian here. It's okay. But no, you had heat coming into that 140, and then it violated coming into the last hour of the trading day. You got to downrank that coming in. And then, which means it wasn't surprising that heat continued on into the following Monday, since you had a lot of heat coming in to that support levels on Friday. So that did get downgraded. That break fairly quickly, though. We have not yet had a secondary response to it, Frank. So last week we downgraded from 15 into the positive 20. Real volatile price action. What's your take here from a technology perspective?
For me, it'll be another little downgrade, and a couple of reasons why. Number one, I'm really old school when it comes to tech and semiconductors and how important they are to it. Semis are not looking great, right? They look very, very similar. They had maybe a little more heat than the sector as a whole. They were definitely
a little bit of pivot
ugly.
Problems
and so when you look at the semis and look at SMH, I mean, we've broke support. We've now made, we're on our third potential lower high, right? So we've got the double top potentially on SMH. We've created that lower high. We took out that support level. We're below the moving averages. That's short-term weakness to me, right? Whether I want to be a bear or not, I generally, I don't think about it that way, right?
We're downranking still into bullish territory.
Just because we're, not liking, just because I'm seeing a bullish signal doesn't mean I have to be bullish, and vice versa on the bear side, right?
Yeah.
So you're seeing that when you're looking at SMH. When you look at the sector itself, maybe it's a little further behind, right? I guess.
But it always is. It's always right? Behind the semis, right? The semis are leaders.
They matter so much to the technology side. There will be individual components out there, but whenever I see charts kind of turn to this, where you don't have really a great compelling anything other than really short-term bearish argument, right? You don't really have a compelling bear argument, but the chart becomes messy. I put it into, okay, well, something may develop between here and when that happens, but as of today, you got to break back out to get my faith. Now, there's a legitimate chance that something will happen in the following weeks, right? We consolidate, we come back, we double bottom, we break back above today's high, which ends up being resistance. We see the moving averages cross over. There are things that can and very likely will develop between here and there. I just don't know what they're going to be today. So I put you in, you got to break out to get my trust back. And that's always the approach that I take.
To me, I do think technology is in the face of another downgrade. And simply put, you have multiple time frame just gobbled mess right now. You have a weekly chart that is still bullish. This still is pivot high, pivot low. You have a weekly chart that on this volatile candle came down and retested that old breakout channel at 135. That's a positive response off that candle. And so on the weekly chart, you have a bullish uptrend with slowing momentum. That's what you have. You see the momentum here. You see the momentum here. You have a bullish uptrend with slowing momentum. When you look at it on the daily chart, you're seeing that 140 is a violation of trend analysis, not just a violation of pattern. And so now you have a short-term trend that is at best neutral And if this was before pandemic, you would make an argument for slight bearish ranking because of the short-term analysis of pivot confirmation on both lower low, lower high. And that pivot confirmation typically would lead you to more of a weekly retracement on the actual sector itself. And so the complicated nature of the analysis within a multiple time frame perspective on the technology space does lead me to downgrade it. It does not mean that downgrade goes into bearish territory because
Correct.
you're overreacting to a slight downward drift in price action. It is a downgrade from, it's like you go from strong bullish to slightly bullish. Remember, there's ranges, +3, +2, +1. Right now you have right now you're on the edge of that +2. You most likely bring it down to +1. You slow down. As you see the sector slow down, you slow down, right? You slow down. And so we're going to slow down here in the technology space because the data, quite frankly, is a little bit more difficult than when you're looking at some of these other spaces that are lining up very well. You take a look at industrials. Who's going to question this movement other than people just saying still's in a bubble? Like other than that,
Hot takes. Yeah, sure.
other than, bubble type conversations, nobody's going to look at this. And by the way, typically when something just rides the 20 period moving average, I don't call that a bubble.
No, it's just trending, right? It's just
trending. Like finally still has its day in the sun in the last 10 years. And it's like, we want to kill it.
Yeah.
Like, let's go back to GameStop, still go down. Let's go back to, come on guys, let's be consistent here. But no, I would not call the Dow Jones in a bubble. That's a methodical, consistent 45-degree angle trend, guys. Like, that's not euphoria going up. Like when gold did that the first time, that was short-term bubble that cannot be sustained. And we said it at the time. Hated it, hated it, hated it, hated it, hated it more. Gold doesn't do that. You like these slow, methodical trends in gold. When you're looking at the industrial sector, metals, gold, you like these slow, methodical drifts. You like these slow, methodical trends. So I don't understand the bubble conversation in the industrial space. It's hot. It's hot because of inflation. If you want to call that a bubble, call it a bubble. But looking at the industrial space here, Frankie, obviously you have your four sectors that are chiefly important to this marketplace right now, and that's the cyclical areas of the market. That's the theme in the market. You have energy, you have basic materials, you have industrials, and you have finance here. Industrials, and those are obviously some of our highest ranked sectors at tackle trading, with the material space being right there at +10. Industrials at 15, Frankie. You gotta love the week. You gotta love the price action coming into coming to the end of this week. Overextend a little bit here, though. What's your read here on the industrial space?
This is always an interesting one, and we've talked about it together in our meeting for 6 weeks now or so, where you've got those sectors that you brought up that are so important to the market and so strong, right? And how do you maneuver them versus one another? Do you based off of where it is today, what it did this week, right? I'm going to just continue to have them in the +2. I'm bullish. I'm looking for opportunities category. I kind of like the idea of keeping that grouping generally pretty tight together until I have a really good reason not to, right?
Yeah, I do too.
Because otherwise it's 5 today because it's overextended, but it's down 5 because it just too many weird things that go on in my head. At least maybe it's just a me thing. I don't know. I do think you're continuing to like it, whether you're going to upgrade it or not, or whether we end up upgrading it. I think the conversation will be, do we want to upgrade we know we're really strong. Everybody knows where we stand on this sector. Do we want to upgrade because of its extended nature? Do we want to leave it be? That's always a tough decision
They better understand where we stand on the cyclical movement, since we talk about it literally every day since the election.
I'm pretty sure the team knows where we're coming from.
Since the election, literally the day after the election. Tim, what did I say? The day after the election. And what have I said almost every day since that point?
Oh, you guys like cyclical stocks?
You guys like
Oh,
industrial?
you don't say. You don't say.
Yeah.
So yeah, I mean,
We've
it
been
was
talking about this rotation trade since November. whatever
rotation.
date that
I didn't call it. I call
Well,
it sector.
cyclic-
Traditional sector rotation is what I called it, instead of the swing trading themes we did in 2020, and it's proven out. And you know what? Find me another company out there that had materials as their top rated sector before all of this type of price appreciation, which now everybody is talking about. Yep, tackle trading was on an island on that one, guys.
It's been nice. It has
Juggernaut.
been a nice run, and goodness gracious, this week in
The
materials,
complicated part of it, though, is you have a 10-point ranking in materials. In finance, you have a 15-point ranking, and in the industrial space, you also have a 15-point ranking, which is all positive to bullish mentality. Now, mind you, in indexes and sectors, very rarely does tackle trading, for those of you who are new to tackle, ever get into positive 3 territory. We're not radicals. Radicals get killed in markets over time. You know, what's the old cliche in the market, guys? There's old traders, there's bold traders, but there are 0 old bold traders.
Yep.
Well, don't be a radical in the financial markets. It doesn't work over time. But we do in stocks, right? We do in commodities,
Exactly.
we do in currencies. It's just we don't do it in the indexes and the sectors, because there's a lot. It's really hard to get 500 stocks positive 3. It's just hard.
I mean, that's just
some
tough.
go
It's a
up,
tough
some
sell.
come down. But in this space, and the 3 major sectors of the cyclical movement are industrial, finance, and materials. Man, you're 10 and 15 coming into the week, and you got great price appreciation this week in those spaces. Little overextended though, Frankie. What's your read here?
Well, again, it comes down to new versus existing, right? For new entries, this might make it a little more difficult because we are overextended. We might need some short-term price action, consolidation, little snapback to the 9. Of course, we're seeing the strength in the ETF. There might be better, opportunities in individual components, right? Which is oftentimes what we look for as traders. So you're still looking for opportunities. I think that's the number one thing. That's the thing to remember. And sometimes we all, myself included, forget we get these bullish signals, but we don't have the entry, or we miss the entry. Doesn't mean that they weren't bullish signals, right? It just means we didn't get what we wanted, or we missed it. I slept in, or whatever the case might be. I'm still need to be looking for opportunities within that space, even if they don't materialize until next Thursday.
That's how I see it as well. You know, we are overextended a little bit on daily charts, and I do think we're even more overextended on weekly charts, actually, with this type of consistent price action over the course of the last few months in the industrial space, in the finance space, and so on and so forth. But I still kind of feel like we're in front of price appreciation here, so I kind of feel like we should all be Captain Kirk and go through price discovery and try to find new price thresholds. So
and they're out there.
Like, chase that momentum a little bit, let that open up the risk graph a little bit, because the movement here, I don't see just stopping on a dime, guys.
Yeah.
What's inflation going to do? Just stop next month?
No.
What the housing prices are just going to stop? There's no supply.
There's no supply. In fact, I saw
there's
that
no supply. They're not going to stop. There's no supply.
And money is cheap as it's ever been, and there's continued backstop from the Fed to help mortgage-backed securities, stuff like that. Yeah, absolutely. I think the trends are going to be intact. The real discussion with the coach is going to come down to: do you give it the upgrade as it's overextended, or do you keep it where it is because we already have such a bullish ranking?
I'm arguing to upgrade. I don't think I'm going to be listening to the non-upgrade arguments, quite frankly. This space is hot, and a 10-point ranking is not too aggressive to match what is happening in this market right now.
Yeah, and I think that'll be fair. They've been
now, if we were at 5 and somebody was making an argument to put it into the touchdown, no, we don't do that. We don't spike the ball.
We hand it to the ref.
We literally, very, very, with a smile on our face, we hand it to the referee after we score.
Have you ever played sports with Mark?
He
No, that's not
spikes the
true.
ball. He does spike the ball. There's no
Yes.
doubt about that. Mark's like everything. Mark doesn't have a 40 to 40 zone. Mark has +3, -3. That's what he has.
That's funny.
1 for 2 each and every time.
Yep.
All right, we done with sectors here?
Done with the ones I want to talk about for right now.
It's going to be a wonderful conversation during the Scatter Report meeting. It is one of my favorite hours of the week as well, when Matt and Frank, myself, a bunch of coaches are sitting talking stocks and bird dogging. And Frank, I think to your point, so many of these sectors on these ETFs are just juggernauts. They're going to have strong rankings, but where the picks are the individual components, right?
Yeah.
And we're going to dig into some of those. And I know you got some charts for later in the show. We'll take a peek at when we get there. First, though, we got to do a quick commodity roundup. We already talked crude oil. We don't need to do that, but we got to look at gold here. You know, the GC contract, you know, just a wonderful bit of analysis over the last several months. Matt, you've always been one to kind of have a pretty good read on gold. It's a product you track so often. And here we are. You know, we had the developing trend, the breakout. We held those moving averages. We finally caught the breakout again yesterday at that 1800 level. And now here we are pushing up towards some of these target zones. And I know you're bringing up this weekly chart. Talk to us about what you were seeing here, Matt, in gold.
Well, like today, or what I've been seeing for the last 3 months as I've analyzed this reversal?
Here's what I'm most curious about today.
Yeah.
That daily 200 versus the weekly 50. You and Frank were talking about it pre-show.
Well, we talked about this on the breakout. The most likely next destination for this is not really your price action back here. That's going to play a secondary role. It's really the easiest form of analysis out there from a support and resistance perspective, and that is these moving averages and the combination of them on daily charts versus on weekly charts. And, you know, I want to give Frank and Coach Mark a tremendous amount of credit, because like over the last 2 years that those two have been on the halftime report, I really never put any emphasis on weekly moving averages. Like I just didn't. But I've just seen way too much evidence in what they've brought to the table, and specifically on gold. When you're looking at the 200 daily here, you know that's a zone. When you look at the 50 weekly, you know that's a pivot. And so, and there's a difference. Look at the 50 weekly, look at the 50 weekly, look at the 50 weekly. You see the role the 50 weekly has played in the analysis versus what you look on the daily chart. Now, obviously, daily charts are always going to be a little bit more choppy than a weekly chart is, but you just don't see that role in any capacity on the daily. It's a random line on a chart is basically what it is. But you got to respect that random line. And so yesterday and the day before, as we were analyzing that the third leg in the short-term trend, but the second confirmation leg in the reversal, we were talking about the most likely destination is in between that 50 and the 50 on the weekly chart, which you can see right here. The 50 on the weekly. What did we see? Profit taking. Not selling, just a little profit taking there. Not to be like, who cares? Yeah, it's understandable off of this type of price movement to see a little profit taking as we get into those weeklies. But you will see a battle here, in my opinion, between that 1840 and that 1855 level, which is right where that 200 weekly, that 200 daily moving average is. So you're in that overextended range, and so what? Let it work. Give gold some. Gold's like a fine wine. Give it a little bit of room to breathe. You don't want to crowd gold. You don't want to put your arms, like, give it some room. Give it some room. It's going to be a little volatile. It's going to be a little bit of a battle, but I promise you, you want to be a participant in that battle as we start to see inflation take hold in America.
So you like the healthy development. You're very, very happy with the way that the price has been playing out, but now I
called the reversal before it did. I love gold. I don't like gold. I love gold.
Okay. All right.
I want to be clear.
Let's not ever use the word like instead of love.
There's just a little bit of a different relationship with gold that I have versus some of the other instruments in the marketplace.
That's fair enough. Frank, anything you want to add to the chart analysis?
No, I mean, this is a very natural, spot on Maddie's end. It's a very natural place for people to start to hesitate, maybe lock in some profits, right? So it would be a good thing to see a little bit of a dip that could open up new opportunities. Breaking above those averages is going to be our next, real good signal, at least in my opinion. I think Matt would probably agree with that, but we should expect a fight. Whether we get one or not, only time will tell. But I think odds are we get a little bit of a battle here in this moving average 2-pack.
Yeah, and I do anticipate a little bit of a battle, but if the buyers just want to destroy the sellers, I'm okay with that too.
I'm fine with that too. Yeah. I'm fine.
Now, I don't want to see parabolic. I just want to see destruction of the resistance channel. That's it.
Yeah.
There you go. One battle at a time. I mean, that's the thing. When you're coming off of these reversals and these whatever they are that are bottoming out, you just have a lot of battles, right? It's one fight after another. You just, and you just take it one battle at a time.
And again, I do see some vastly different analysis between the reversal we saw in gold in October of 18. And guys, check the tape on this one. I literally did the commodity report that week and called the bottom here on gold. But I do see some subtle differences in the analysis coming into this reversal versus this reversal. I feel more confident on this one than I did even this one, guys. And it's because of the backdrop of what we've done from a monetary perspective.
Right.
But I also think that battle's going to be waged hot and heavy, far more than the battle here. And so expect some volatility, in my opinion.
Yeah, I think those are proper expectations. I would agree. I mean, you got to love the backdrop, the story, the fundamental argument for it. But we still have a technical battle, right? Yeah. Technical analysis can win a lot of short-term fights in particular.
I agree.
Absolutely. While we're on metals, by the way, copper continues its juggernaut run. I saw that this morning. Just
copper breaking out.
Just HG.
Yeah.
Just an absolute beast.
It doesn't care about you. All it cares about is inflation.
I mean,
that has been
wait. Hold on.
On copper.
I got to do my central bank roll. Hashtag no inflation. That's all it cares about is hashtag no inflation. Commodities always go up like this in the face of no inflation.
Yeah, no inflation.
That's how it rolls.
We probably need more inflation.
Still going up 400%. That's not inflation, guys.
That's just the way she goes.
That's not inflation. That's just price discovery.
Real quick, last two, then we're going to get into earnings. Then we got Frank's chart still. Let's do Bitcoin first, then the dollar, BTC. Kind of just been stuck in this range. Obviously a little bounce here today. It's been kind of neutral for most of the week, but it's been healthy in terms of just holding the zone. I'm, waiting for that box to clarify one way or the other. Either of you want to add anything to Bitcoin?
I'll add to Bitcoin when it decides to move outside my box.
I did think it was funny. The Bank of England Governor Andrew Bailey said they have no value. And let me be very blunt again. If you buy them, prepare to lose all of your money. And
listen, I think people, what's his name, Andrew?
Andrew,
there's thousands and thousands of cryptos. Don't associate all of them in the same box. I agree with you on a lot of them that they are garbage. And I do not believe in the meme type crypto movement. I'm sorry. Governments, corporations use Bitcoin. How can you say there's no value?
Yeah, look at the Square report today. I mean,
I don't understand that comment. And coming from somebody like him, it makes no sense. Like literally governments and corporations and consumers use Bitcoin to transfer money. Like how do no value?
Yeah, I know.
Zero value?
These central bankers, bro.
Come on, dude.
They don't like the cryptos. They see.
I mean, you don't even have to argue that point because it's so silly.
It is silly.
Yeah,
it just sounds like an angry old man on that one. To be honest,
it does. Get off my lawn.
Get off my lawn.
Yeah, get off the pound. Let's go. All right, the dollar last here.
I'll give you a choice: Bitcoin or the pound. Next 10 years, which one do you want?
Bitcoin.
I think a majority of consumers would say, give me the one with zero value. No value is better than the pound.
Oh, my goodness.
Yeah, I think that's fair.
Fix your own currency before you rip on another one, dude.
Well, speaking of fixing currencies, the dollar's down again here today. USD.
That might fix the pound.
It might help the pound a little bit in the short term as the US dollar continues to fade. I reacted a little bit to the report here this morning, but honestly, it's just been a weak product for a long time. Breaking below a pivot, Matt, is going to catch a downgrade, don't you think, dollar?
Yeah. It violates. Yeah, we love gold and violates support. Yeah, it's going to downgrade.
Absolutely.
But I don't think you're going to see a radical downgrade. You are coming into some more weekly support channels, as you can see, and that's obviously going to play a role in gold too, guys. And one of the reasons why I feel like there's going to be a battle in gold, and yes, I do believe gold wins that battle, but the dollar's coming into some major support here, and you're certainly overextended a little bit on your weekly chart. You could see the dollar form up some support here and put an impact on the gold chart price appreciation. If gold was a stock and we didn't have to worry about the dollar on it, it's just sexy.
Yeah.
But again, when you're looking at this, you could certainly see some consolidation here. You could certainly see some downward drift here. But I do expect 2410, not 24, but 2410, 2420 to play a role. And so the biggest thing, if you truly want to, think about gold for a second, the biggest thing would be a violation of 2409. You violate 2409, you should see some pretty aggressive downward movements in price. But yeah, it's ugly, Tim. Who wants a dollar? Like anybody?
Who wants to own the dollars?
Anybody?
Dude, there are always going to be those people that say, I want to have that cold hard cash, but I don't think they understand what is happening to the economy right now.
Not a lot of people any longer.
Yeah, not a lot there. All right, let's move into stock talk here. We got earnings roundup, and we're moving into.
And even when they say that, give me that cold hard cash, they use the Cash App.
Yeah, I know. Well, they're using the Square Cash App.
They think, give me that cold hard Cash App, right? You're talking about the Cash App, right? That's cold hard cash. Yeah, that's what we're talking about.
That's right. Earnings roundup, Matty. Let's do it. There's a couple of them.
I'm going to rapid fire here. I'm going to rapid fire, yeah, because you got some. You want some book speaking, is what you want.
Oh, listen, not always. No,
you want some book speak.
Maybe.
You know me. I'm never going to do that one, but. Square. Let's start with Square here, Tim. Square comes out, reports earnings of 41 cents versus the expectation of 17 cents. A real good beat on EPS numbers. Revenue was even better, in my opinion, coming in at 5.1 versus the 3.3 billion in expectation. Revenue also, that it resulted in a 266% increase in revenue. I wanted to start with the good numbers because you always start with the good, right? You guys start with the good. I'm going to start with the good numbers. Square, really, really, really good numbers coming out from a raw number perspective, not only passable, but very, very good beats on EPS and revenue. That revenue exploding 266% year over year. Now, we've seen this. This is the quarter where it's like 70% increases in revenue, 177%. Like literally, guys, the discretionary space is averaging like 160% increase in revenue year over year. So you got to take these increases in revenue. They're shocking numbers, but with a little bit of a grain of salt, given the fact that what were we doing a year from now?
Not much.
We were shutting down the economy is what we were doing.
We weren't doing a lot of spending.
We weren't doing a lot of anything. And so coming out of that, obviously impressive, but the numbers, I mean, they're just a little bit inflated given what they were coming from is all I'm saying. Very positive numbers though, coming out of from an EPS and a revenue perspective. Tim, what's your read? I know you looked at Square's reports. The numbers were fantastic. It was pricing in a lot more aggressively on the open here today. What was your read on Square's earnings?
Give me a weekly chart real quick, because the daily chart, we'll get Frank's technical read in a minute, but it's obviously
it's a gobbled, choppy mess.
It's Matt's Bitcoin box.
It is a big box, no doubt about it.
Hold on. You want the box?
I want the box.
What's in the box?
That's the breakout box. In the box could be interesting, but wake me up when we break out of that box.
When you see the box, you don't want to look in the box.
No.
We know what's in the box.
We don't want to go there.
We've seen that movie.
What's in the box?
We've seen the movie. We don't want to see what's in the box.
Random, crazy, volatile price action is in the box. You don't want to open the box. How many people understand what we're really talking about right now?
I would bet 20%.
20%? No, higher.
You think?
Higher.
Dude, that's an old movie.
It's an old great
It's a great movie.
Yeah.
Maybe higher. Maybe
the box.
I'm going to bet the under because
I'm going over. They got to know. We've done it before.
They might have got there when I said Brad Pitt, by the way, but
You did?
we'll see.
Maybe.
I did say
Maybe.
that. Here's my
Again,
reaction.
same type of philosophy, though. You don't want to open up the box with random choppy price action.
By the way, Swin says he did get the reference, one of his
Nice.
all-time faves. So
It's
Swin
Nice
right
win.
there
great.
representing.
Of course, if you were to ask who is the one person at Tackle that would understand what Matt's talking about right there, I would have
Christian.
said Swin. No, Christian. Yeah, Christian.
Christian got the reference. I
Yeah,
guarantee it.
Christian, 100%.
If you love Square's thesis long term and what they believe in, nothing in this report is going to take you off of that. Let's start with that. Especially
it's good numbers, Tim.
In
Very
fact,
good numbers.
Especially the positive notes that Jack Dorsey had about what they were doing with Bitcoin. They made $75 million from Bitcoin over the course of the quarter. They picked up a lot. By the way, that's not just in the asset gain either. That's in the active daily users and things like that. Their user counts went up. They believe in what they're building moving forward. But quite frankly, until you get outside of this box, there is not much here besides just back and forth short-term trading analysis. We're stuck. From the pandemic, when you had that big year-over-year increase in revenue from a year ago's quarter, Matt, we're up 300% on the stock price. So if Square takes a year to churn through that, catch up with long-term trends,
a year? Try 10.
I mean, it could whatever it takes,
Yeah.
right? You're not going to change your thesis on Square if you've got a 10-year view, but there's nothing here. It's going to get you excited about a swing trade. Let's start with that. There's not a thing there.
Oh no, there was zero swing trade analysis in any capacity on any response on earnings. When you're literally a range of 280 to 200 and you're smacking at 240 before the announcement, there's no swing trade there.
Mm-hmm.
It is a volatile, choppy mess. And again, you have a mixed response on their numbers. These numbers are really, really good, but this space is not really, really, really good right now. You even tried to run up, like it cash open, ran up, got beat back down during the middle of the day so far. So I do agree with your premise, Tim.
Mm-hmm.
Long-term investors are not going to look at this report and have a hot take on it. They're going to be like, this is an amazing report out of Square. And if you were a private investor in a private company and they reported these numbers, all you would do is take your cash and say thank you, because that's how good of a report it was.
Mm-hmm. And Elon Musk has been the quasi kind of Doge father and the ambassador to Bitcoin lately and all that kind of crap. Give me Jack Dorsey over that, by the way. Jack Dorsey actually talking about the implementation of how crypto is going to change the way currencies work. And actually, it makes more sense for Jack to be talking about crypto since his company is a fintech company. So I don't know.
Okay, but the difference is Jack Dorsey not only talks about it, he implements it in the real time, whereas Elon just talks about it and then hypothetically talks about what he's going to do at Tesla. And it's getting to the point where Elon, we got it.
What are your predictions?
August 18, Elon, save the world, bro.
All right, I'm going to give you one. You got to answer quickly. Do you think Elon?
That's never good for me.
Do you think Elon's going to make a great appearance on SNL?
Yes, 100%. Are you kidding me? Popcorn worthy. It'd be fantastic.
Listen,
my criticism of Elon isn't that I dislike Elon Musk. No, save the world, bro.
SNL's a tough one, bro.
No, dude, SNL is not. SNL is going to make fun of the Doji type meme stuff, and no, it's going to be a fantastic appearance by Elon.
Sure, yeah.
I didn't even know Elon was on SNL.
I think he's on there tomorrow. I'll have to double
check. I thought he was on last week.
Was he on last week? And
I haven't watched.
I don't watch it, so
I do, but I usually watch 3 weeks at a time because I really like SNL, but I just don't have it.
No, he's on tomorrow. I think.
I'll watch it.
Yeah, I think it's tomorrow.
I'm a fan of SNL, so I'll watch it. I like sketch comedy, though.
Sure. What do you got next there, Matty? We got a few. We got to round up.
Yeah. We started with the good numbers, not exactly a good price response, though. Let's go into the bad response, though. We start with the good. We're going to go with the bad here. And again, I'm talking about price response, but also a company like Monster needs to do a little bit better than 59 cents versus the expectation of 61 cents. Remember, we had just gone through, I know we've had a couple weeks of consolidation in Monster Beverage, but we're on the backs of an 85 to 99 type price appreciation over the course of the last couple months. Monster comes out 59 cents, slight miss on EPS numbers. Now, once again, guys, what percentage, question for you guys, what percentage of S&P 500 companies have missed on EPS numbers this quarter?
I'm going to go with 14%.
It is 14%. Now that might have been different throughout the week, but it was 14 coming into the week. So, Monster, they're part of the 14 percentile that did not beat EPS numbers. You're at the top end of the chart. What's going to happen?
Yeah, you're
Probably
getting
not
this kind of
good.
price response.
Probably not good.
Okay.
So Monster misses on EPS, kind of in line with revenue, 1.2 versus the 1.2. Monster increases 17.1%. I mean, these are passable numbers for a company if you don't know the history of that company. And I'm sorry, Monster's got to do better than that. A miss, and a gap down. Technically, you're kind of in no man's land at this point from a trading perspective. And honestly, you're into a gobbled mess. Do you guys got anything to add to Monster?
No, I have no interest
Nope.
in the company here.
Yeah, that's
Yeah.
got a lot to work.
Lots of work in front of it. Now let's take a look at Roku here. Roku comes out. Now, Tim, from a raw numbers perspective, this was a really, really good report. In fact, I would say it's better than Square's report.
Yeah.
And not a lot better, but I would say it's slightly better than Square's report coming from what it was coming from. Roku comes out. Well, let me start with what they were expecting to do. They were expected to show a loss at 9 cents EPS numbers.
Mhm.
They came out with 54 cents positive. Now I'd like to see it, some quote unquote non-GAAP type fuzzy math on that one and how they got to there, but officially 54-cent ding on EPS numbers. That expectation was a negative 9 cents. Really good beat on EPS. Revenue came in at $574 million versus the expectation of $490, which resulted in a 79% increase in revenue year over year. Once again, not probably expected out of a company like Roku. Technically, little bit of a gobbled mess, but you were coming from the 200-day moving average. A lot of times bullish uptrend, short-term weakness. Let's look at that on a weekly chart. Roku was a darling of the before the pandemic. It was a darling, and even after the pandemic, it was a darling.
Mhm.
Fallen out of favor over the last few months, though, guys. Do you have any interest in a company that was one of those? Man, Roku. Beautiful charts. First time we've really tested the weakness on Roku. Do you think Roku can buck the trend of these stocks that did amazing price appreciation in the pandemic? We've seen a lot of weakness out of those stocks as they've been puking up those gains. Can Roku buck the trend based on a fundamental perspective? Let me start with Tim.
Yes, I do believe they can. And I know that the chart is an absolute mess and it's going to take a lot of work to get there. But this was a really good price response. It's being sold off, by the way, a little bit from where it gapped up into. It's kind of even hard to see it. You came off the 200 moving average. You're up 11% now. There was several different data points in this report I thought were very, very interesting. Number one, the total combined number of hours watched on Roku devices was 18.3 billion, the number one place that people stream content, in terms of total hours watch, Frank. And when I think about Roku and the way that they're positioned and the way that streaming companies are moving forward, I absolutely believe in their long-term potential as a growth company.
Correct me if I'm wrong, because I'm not a consumer of Roku. Okay. But can you watch Netflix on Roku?
Yeah, but you can watch a lot of stuff on a lot of stuff like Apple TV.
No, I get it.
Mm-hmm.
But we go to Netflix to watch Netflix. We go to Amazon Prime to watch Amazon Prime. We go to HBO to watch HBO. We go to Roku to watch everything. Mm-hmm. I'm just saying that's an impressive number that is understandable in context.
Sure. Yeah, they're not watching Roku original content on the Roku device.
Yeah, they're not right.
Correct.
Like if you came out and said Netflix is 19 billion hours, I'm like, yeah, people are going directly to Netflix and never leaving their house.
Sure.
Right.
Yeah. No, I get it. But for me, though, I mean, what Roku's doing is exactly what their company's, designed to do, is get those devices into people's hands so they can stream all this content coming across different platforms like Netflix and Discovery and all those different ones, right? And I believe they've got the opportunity to do it moving forward. Chart-wise, complete mess. Unless Frank is seeing something I'm not, complete mess in the short term. Needs a lot of work before you get clarity on it. But I do believe in Roku's long-term potential. Absolutely. Frank, what about the chart?
This chart is gross.
It's gross.
Not interested at all. I mean, It'll be interesting to see what this move is, right? How we, over the next week and a half or so, maybe something can develop. So if it's a stock that you like to trade, fair enough. But right now, I mean, there's a lot easier charts that have, I think, higher probability of working out for you than taking your guess on Roku. Because take a guess and your guess is as good as mine right now based on those technicals, especially in the short term.
I would take Frank's guess over most people.
I wouldn't want to guess. I figure I got a 50-50 shot though.
50-50. I'd say it's a coin flip scenario, but my question is I'm with Frankie. There's no trade here, like none whatsoever. Long-term investors, 200-day moving average, going to look at this situation a little bit more closely than they would if we weren't sitting around the 200-day moving average. And so fundamentally, I do think you're on solid foundation, but it would not surprise me to ultimately see a violation of the 200-day. And ultimately what you might see is a third leg down on this weekly chart where you have leg 1 retracement, leg 2 retracement, where you come all the way back down to the 150 where it's pre-pandemic. So it's a company I do appreciate from a fundamental perspective, but we're also talking about a growth stock, and growth is not the flavor of the month.
That's right. Yeah, growth has fallen out of favor. One key thing to watch with Roku over the next year.
And before growth companies complain, you had 12 years, guys.
You'll be back,
right?
You're good, and you'll be back. You're good.
Just fine.
Let dividend have a day in the sun. Let it walk on the beach a little bit.
One key to watch for Roku, if you are a fundamental type person watching these reports over the next year or so, is if they can convert advertising revenue, because that is a big initiative for the company. Not been able to monetize all those users and hours quite yet.
Yeah, but billions and billions of hours, you still got to make money.
Still got to find a way to monetize all that stuff.
But Roku, I mean, it's not. We're not talking about a debt-driven company right now that's never going to show a profit. That's not Roku, right?
No, it's just a traditional growth idea. Yeah, absolutely. Starting to show a little bit of profit right now. So yeah. All right. So I still like it long term, but short term mess. What do we got next?
I'm going to your book next. I feel like this is Tim's book day. Roku, Square, and DraftKings.
Oh, bro, Tilray's in there too.
I'm not. I didn't pull up the medical merit. Kronos did though.
Yeah,
Kronos did. But no, let's talk DraftKings. We talked about good numbers coming out of Roku. We talked about good numbers coming out of Square. We talked about the bad numbers coming out of Monster. Let's get into the ugly numbers that is coming out of DraftKings. So a little bit of good, bad, and ugly here today, Frankie. DraftKings comes out, was expecting at 42 cents. They missed. It came in officially at a 78 cents. Once again, when you see a little bit of misread on toss, we're talking about GAAP versus non-GAAP type earnings sometimes, and sometimes toss does not reflect what is the numbers. But DraftKings negative 78 cents versus the expectation 42. Revenue did come in above the expectation of 312 versus the expectation of 230. Now, what was interesting to me, and which leads me to have an automatic sell on DraftKings, quite frankly, is you were expecting to come in at 42 cents this quarter. You didn't come close to that. You didn't sniff that. You didn't come into the neighborhood of that. You're not into the ballpark of that number. You're not in the same country as the expectation of that number. But today we're supposed to believe that you're increasing guidance for next year?
Yeah, and next quarter, right?
Okay, get out of here, get out of here, DraftKings. Like you missed that bad, and then you increase guidance and say, no, but we're going to be better. No, we're in stop talking DraftKings and actually show something. Okay. I understand the selling here. It's terrible numbers on a mixed message coming out of DraftKings. This violation of the 200-day moving average is very concerning, in my opinion, from a technical perspective. The first test of that 50 weekly is going to be important, guys. And I got Frank and Mark here. You guys are the weekly moving average kings. First test of a weekly moving average, do you guys have any emphasis, or is it just like a curiosity type moment?
I mean, there are really short-term day trading and hyper swing trading, short-term things you can do off a first bounce. And statistically, first test of moving averages are overwhelmingly they hold.
Yeah.
But if I'm like gonna like position trade, or let's say I'm looking for like, hey, I'm gonna get into DraftKings, that's the first test. After that, it weakens up and you could see downward pressure. It's out of favor right now. It's in a space that's a little bit out of favor, and the chart is obviously ugly. So you can hold there, and you can, like get a little short bounce off that. But after that, all bets off.
Yeah.
And Frankie, go ahead.
Oh, yeah, pretty much nails it. I expect it to give it a short-term bounce, and what's beyond that, it could be a good bounce. It could give it right back in, because like Mark said, it's not looking good. Technically, it's really the initial reaction to that I think catches our attention. Is that fair to say, Mark?
Yes.
Yeah. Well, again, you saw that first test of the 200-day moving average there, and you did see that bump back up. But again, earnings got absolutely just crushed there. I'd be surprised if we didn't see some more downward movement in price. And again, I certainly could see a little bit of a bounce here as it tests that. But 45, 40, and 35 are not out of the realm here.
No, it seems like testing 45 is almost inevitable.
Mark?
Yes, sir.
35 is not out of the realm either.
Listen, I've been saying for a long time, I'm willing to take 100 shares at 35. Now, I don't have a naked put on it right now because I can read a chart and I can know that there's some downward mobility, and I can get a bigger premium at some point because that chart's going down more.
Well, let's see what kind of premium he can get at 35. Yeah, 42 days. Not a lot, but
I want more. I'm sorry. I want more.
You're such a greedy naked put trader.
I am a greedy naked put trader. And whenever I get away from that, I always remember why I'm a greedy naked put trader. So
I gave Mark like 8% on a 6 delta. He's like, not enough.
Not enough.
He's greedy.
Sorry.
He did.
Greedy.
Yeah.
Nothing wrong with it.
I get it. But no,
that's a good place to be greedy.
I might want to be a little bit more greedy on that too, because it might say 6 delta based on where the stock is in comparison to where that number is. I want to put it at 6%.
Yeah, exactly. I wouldn't put it at 6 delta either.
I wouldn't put it at 6%. I would put it more like 25%.
And thus you need to get a bigger premium.
And thus you need bigger premium. All right, so let's take a look at the next. We got through the good, we got through some of the bad, and we definitely took a look at the ugly there in DraftKings. Let's go on to EOG, though. Tim, good price response coming out of this, but to me, this is as much as what's happening in this space as it is specifically to EOG. Once again, we're seeing energy get pretty hot right now. It's up about 2% on the day, up about 1.7%, clinging to that potential breakout there in the energy space. Taking a look at EOG, I honestly, if this was Exxon reporting today, Exxon would have done this. If this was Chevron reporting today, Chevron would have done this. If this was any energy company that beats today, I think you see a pretty decent response out of the energy space. Again, we're talking about all the energy components have pretty much been done reporting. We know where they're at from a fundamental perspective. We see the market moving up following Exxon, Chevron, and Conoco. Now EOG comes at the tail end of that. We're already bull on bull right now with the energy space. Really good breakout on that weekly chart. And I do think the weekly chart really tells the story here as we fight up into that 200-day moving average. Numbers here, 162 versus the 144 EPS, so officially a beat. Revenue came in 3.7 versus 3.6, officially a beat. Revenue decreased year over year by 21.7%. Raw numbers are perfectly fine. There is nothing wrong with those raw numbers. But once again, those raw numbers are not as good as Exxon's. They're not as good as Chevron. They're not as good as some of the other energy components out there. Again, this is what happens when you have when your space has favor, right? When
there was so much going for these guys because the space is strong. Look at that technical setup going into the breakout, right?
Beautiful.
What else could you ask for, right? So it becomes very, very easy to want to gobble that guy up.
Yeah,
everything lined up for it.
It really did.
It did, but once again, the raw numbers perspective, you got to love the price appreciation, but I just don't feel if this is the first company reporting in energy, guys, versus one of the latter ones, you're seeing a muted response in the face of because all we would talk about as participants is, well, you got to wait on Exxon, you got to wait on Chevron, you got to wait on Conoco. You're not saying that any longer. You're not saying you're waiting on anything in the energy space. You're through the European counterparts. You're through Exxon, Chevron, Conoco. You're through the major drillers out there. You have a fundamental view of where this sector is. You're obviously expecting catch up here from the energy space to what's happening in the crude oil space. You're following all of that, and then you report on the back half. You're going to get a little bit more momentum than you would have in the face of it. And so I do think you're seeing a little bit more bullish movement in EOG, given the fact that you're coming on the tail end and you have favor in the space versus before we were talking about Exxon, we were talking about it doing the same thing. So I like the price movement, and it is a beautiful breakout. And if EOG is your play in the end, there's nothing wrong with that. I'm not trying to talk anybody off EOG. I'm just trying to give perspective
Context
to the price appreciation is the only thing I'm trying to do here. But I love it. I don't love the numbers as much as I love some of the other numbers coming out of the energy space. But you got to love the breakout here. It's clean. Now we're going to fight that 200, Frank. To me, if EOG's on your watch list, you got to love this. It's an easy trigger for me above the weekly high, quite frankly. But that's more momentum-based trading than anything.
Yeah, that weekly is something to be watching, right? I would love, if that is my play, again, just like the space as a whole, just a little breather there to push it and fail the first test and then break through it, say Wednesday. Yep. That could be shiny because there looks like there's room to run into that $90-ish area, in my opinion, if we can get clear of that 200, which is a big battle.
When you're looking at this right here, you do have really nothing until you get into 90, Frank. Like there's some room there. Maybe 87, a little bit of pivot action at 87, but I'd say 90. And honestly, what do we say when it breaks out of 90, guys?
Oh yeah, we know what happened when it breaks at
every single time, right? New traders, we're kind of being kidding. 120% of the time it goes to 100. But again, we do like $90 breakouts because they do have a magnet tendency to go to 100, but it doesn't happen all the time. But 90 makes some sense here, and 100 on T2 makes some sense here. But we're talking about EOG. It's not going to do it like a tech stock.
Right. Well, unless it keeps up this momentum, right?
This momentum had earnings. we'll see the follow.
We'll see where that one goes, but definitely nice. And I think the real thing that goes to show is we've got lots of options in the energy space because, like Matt said, if EOG is or isn't the one that you want to try to work with, I think it makes sense either way because you got lots of options. We may not all have the same idea of which ones are the prettiest to our eyes, right? But we've got lots of pretty looking things out there. So something for everybody and hopefully in the week to come.
I agree with that. And the last, Tim, Cigna, healthcare space. Cigna comes out. Yeah, I just thought I'd give a little Cigna action today. And a little bit of that was because I kind of like that breakout at 260. Cigna comes out, positive response to their earnings numbers, $4.73 versus the expectation of $4.42. Revenue slightly beat the expectation of $40.3 billion with the 41 handle. That resulted in a revenue increase of 6.5% year over year. Again, pretty decent numbers. Hotter space. Breakout at 260. Guidance was affirmed, basically. What's your technical read?
Frank, is there a trade here?
It's got to be compared to the other healthcare plans. I mean, they're insane, right? Right now, they are insane. How much more do you want to add? If you already have a play going on Anthem, a play going on UNH, do you really want to add CI to the mix? I don't know. That's probably a decision you have to make for yourself. I do think that if I'm looking to maybe take my first stab at the space, if not been taking advantage of the movement that we've seen within the plans lately, I think it does stand out a little bit in the short term, right? Bouncing off of that 9, got the earnings behind us, the numbers, whatever, the response is there, right? So I think it does kind of stand out right now from a brand new entry perspective versus some of the others that have kind of ran a little bit, might be a little tougher to get into on, say, a Monday morning.
If you like, real quick,
well,
Matt.
very quickly, Tim. When Frank's talking about all these plans, there's 6 healthcare plans within the S&P 500 itself, and a couple of them, like CVS, has absolutely went juggernaut. UNH, absolute juggernaut. Tough trades here, right? Great trends, great patterns. 90 MA analysis has been really, really powerful there, but again, you're a little bit overextended. And if anybody was to pull up UNH in the scatter report meeting here in about an hour and a half from now, we would all veto it. Like every single one of us would veto it, not because of the strength of trend or the quality of company, but simply because you're 5 bars into a breakout.
Yeah, your risk to reward just is off, right?
It's just off. It has nothing to do with the quality of company. It's a fantastic company, and you could say the same thing about the momentum, even more so in CVS. You're 5 bars removed from the breakout. Where was the breakout? Right there. Where was the earnings? Right there. You're now overextended here. And so it's a little bit tough. But when you're looking at Cigna, you're looking at a breakout, right? You're not late. If you're making a decision that Cigna is your trade and you like that 260 breakout, you're not late to that party. If you look at Anthem, Ant-Man, we like to call it Ant-Man.
Ant-Man.
Yeah.
It'll always be Ant-Man to me.
Like, tell me Ant-Man's not going to get some conversation later today.
Yeah. Well, that's the one I was looking
high
at.
base hesitation, breakout scenario.
Do you like Cigna or Anthem more?
Well, I personally like Anthem more in general. So typically I do like Anthem a little bit more than Cigna, but that's not a knock on Cigna.
Yeah, I would agree with both statements. Yeah. I mean, these plans, if you followed them at all, I saw Scott in the chat. I hadn't seen him for a while. I remember, way back when they did the market recap, I'd see him a lot. And we always talked about these stupid plans, right? Because when they get going, whichever way, they can really move, and they really, really move together. Industries do, right, as a whole, but these healthcare plans tend to take it to the next level. So it's a very strong space. Definitely think it's watch list worthy, if nothing else.
No, I agree with that. And the one stock that I think that people are going to have a little bit more of a longer term conversation on is Humana. When you're looking at Anthem, you're looking at a short-term swing trading environment. Cigna, same thing in my opinion. Now, obviously, people invest in those two companies all the time. CNC, healthcare plan there, CNC, that's a gobbled mess of nothingness. But when you're looking at Humana real quick, and you look at this a little bit on the short term, you get the same read you're doing in the rest of the space. But when you put this on a weekly chart, let's see what's in the box. You're breaking out of the box.
Out of a nice box.
Breaking out of that weekly channel. That's probably better for me anyways, from a more of a position style with that weekly breakout of 450. But I do like Ant-Man breakout. I do like the Cigna breakout potential as well.
Yeah, they've been on fire, and I'm glad we're breaking them down, looking at them. I'm guaranteed we'll have a conversation about Ant-Man, Cigna, a few of these others for the weekend reports here in a little bit with the coaches. Love it, Matt. Thanks for the earnings roundup as always. You do a fantastic job with that. I know our community appreciates it. I know that I do as well. It helps me understand a lot of these companies. Stayed on that DraftKings chart a little bit too much. I was getting a little bit emotional.
What did you say, DraftKings?
No, don't do it. Don't do it.
Did you say DraftKings?
That's so ugly.
Do you want me to analyze the violation of the intraday support level of 49 as well?
The low base breakdown into a day trade. I don't.
We did the weekly analysis. We've done that. That's a Head and Shoulders weekly confirmation. We've done the daily analysis. Do we need to have
a private session on cost average down plans?
Mark wants to spike the football right now.
Do you need a coaching session on how to handle volatility?
I might.
Listen, I love DraftKings long term. I just hate the valuation. Come down. I think it's a great story long term. It's just got caught up in a lot of craziness to the last year.
It's getting caught up in a nasty trend and price reaction right now.
Yeah, that's an ugly chart.
Yeah,
that's
absolutely.
an ugly chart.
Frank, show us some beautiful charts. Give me some calm and some peace here.
Get out.
Hold on. I got one last time frame to analyze.
Okay, we got to look at that
We
time
got to
frame.
go on the minute time frame. Like, look at that minute time frame. You tried. You tried.
Hey, strong
You
support
gave
there
it
at
a
49.
try. That's not how it works. No, that's not how it works.
See a
So
double bottom.
you got momentum coming into that, buddy. Now you just gotta let's just get done with the week before the selling continues on Monday. That's what you got, bud.
This is one you're waiting for the closing bell on.
I'm
That's absolutely
just
right.
saying. You know how much I put into multiple time frame analysis, and you don't have one time working for you right now. Not from a 1 minute chart, not to a weekly chart. There is not one time frame working on behalf of DraftKings.
Don't let him fool you, Tim. That's a double bottom in the making.
It certainly could be. You got the initial makings.
Hey, that's the first step, right? Got to get that 1 minute chart first.
You got that 1 minute chart, hypothetical double bottom. This is accurate.
If I'm hanging my hat on the 1 minute chart, double bottom analysis after the report.
Listen, it could. Hey, listen. You can't get a daily reversal unless you get a 1 minute reversal.
Exactly.
Tim.
It all
Fair
starts
enough.
on the short
Right.
time frame.
I'm just giving you some hope, bro.
Seeing the
Giving you some
positive.
hope.
All right.
All of our hate is truly going to drive DraftKings up on Monday, by the way.
Certainly.
All right, Frank, we've been pushing along here today. Love the conversation. Don't mind doing that, but it's going to limit your charts a little bit. Find me the best ones you got.
And you promised me at least a dozen today, Tim.
Let's do it.
Okay, let's start with KB Homes, KBH.
I saw these guys this morning, actually.
$50 breakout. Maddie, I'm going to throw these guys to you. We got a little $50 breakout play going on KB right now. As of right now, at least, looks like they're going to close above that resistance. They've got some history going way back, right? He's been around a while. You probably remember when KB Homes was on its way to $90, but that was quite a while ago. Don't really have a lot of significant resistance. We'd have a major pivot point, and I'm going to have to say on the monthly chart going back into 2007, but we don't really have any significant price history between this 50 break-in and that approximately $55 mark going way back in the Wayback Machine. Could I talk you into a $50 breakout here on KB Homes, Maddie?
Well, it does feel like we're subprime market meltdown this space in the market, and that is what transpired here before the nasty correction that happened in real estate in 07, 08, and 09. With all of the residential construction companies, it's always going to come down to which one you personally like.
Correct.
Right. And when you're talking about D.H. Horton, Lennar, when you're talking about Pulte, Toll Brothers, KB Homes, it really is pick your poison, which one you personally like, right? You know, for somebody, they might say, oh man, I just love the momentum of D.H. Horton. I just love DHI. I love the momentum, the consistency, high base breaking out post earnings today. DHI fits a high base swing trading, you know, with momentum behind it. You got to love that, right? And look at the 9 EMA there. How do you not have confidence? How do you not have confidence that that's going to just
like what you're seeing? Right? I was hoping it was going to be closer to $100 so I could give you the choice between the 100 and the $50 breakout. It just moved much on me.
You know, when you're taking a look at Lennar, same type of thing. But coming back to KB Homes here, KBH, look at the consistency of that 50 handle. You got to love the consistency of that 50 handle. And yeah, you got a good candle, but you are not overextended on the breakout here. And for me, I and again, there's some good trades in this space right now, and there's certainly going to be some representation on the scatter reports.
For sure.
You will most likely have two home builders, one on the stock report and one on the options report. Now, obviously, you're never going to want to trade two, but we're going to put the one that's the most liquid option play on the option report, and we're going to put the one that is the best technical setup on the stock report. And so I do think you're going to have representation on those reports, and I'd be a little surprised if, you know, honestly, if DHI isn't on the options report. And I look forward to the conversation we have between, you know, the breakout on KB Homes at $50 and some of the other ones. But the KB Homes $50 breakout stands out in my opinion.
Yeah, the DHI and KBH are the two that stood out to me in that space. So
me too.
So
if you're looking for a more of a multiple time frame swing position style, I think you're looking at KB Homes. And that's why I think you're looking more like stock. If you're looking at more of a momentum play in this space, you're picking DHI. That's a really good chart, momentum based. I think there's room in this space right now for everybody, for different types of traders. I like KB Homes, a little bit more consolidation, little cup and handle feel to it, ascending triangle that puts you at the starting point of trends, versus whereas you're looking at DH Orange, you're looking at a continuation of momentum in trend. So yes, you're looking swing trade in DHI, multiple time frame analysis in KB Homes on the breakout.
Kind of dealer's choice right now in the industry. So
pick your poison. And I personally like both of these. Like, it's just depend on what you're looking for in your portfolio, quite frankly. You're looking for something a little bit longer term that you don't want to manage very aggressively. You're probably looking at the stock position type analysis on KB Homes. Again, if you're looking at trading a little bit more aggressively, short-term swing trade style, step system type style, I like both KB Homes and DH Horn for step system, but I would pick DHI for the step system because of the momentum and trend.
Very cool.
Cool. Mark, Tim, anything you'd like to add?
No, I think that's spot on.
No, I like the KBH
really
breakout. I think it's clean. You can trade it. I think Matt's spot on here. Dealer's choice in the industry. You got a few choices.
For sure. All right, let's it's getting close to lunchtime. Let's look at Bloomin' Brands, BLMN.
Okay. I see what you did there.
See how it goes.
I like it. Yeah. I like it. I like Marty hitting support. I like the upward move in price. I like the pivot confirmation, and I like the candlestick relationships to this support bounce. This is a bullish retracement snapback against the old resistance channel. Very good technical setup to be in.
I don't really have any other things to say. I mean, you pretty much sum it up.
Is that a Cody special?
No, I don't think it is.
I don't think it is either.
The Cody special is usually a little more violent, right, or a little faster. And these guys have just been a little bit more orderly, stepping stone style. It's close enough, and I think Cody might call it a Cody special. I just think Matt would.
Cody can't call every downward movement in price that tests resistance.
Have you met Cody? Of course he can.
No. What Cody says and what I allow on that different. Cody special is breakout. If this candle would have came back down and tested, that's the snapback.
For me, when I think Cody special, I think we broke out and it's two candles back into a hammer, a doji, something like that.
Something like that.
Two candle snapback.
2-3 candle. 2-3 candle. This is more like a traditional pullback coming into resistance. I'm not giving a bullish retracement the Cody special. Like, no.
You're just not going to give it to him?
No, not bullish retracements. It's like the most standard pattern out there.
It's a beautiful pattern, and it does make me want to go get a bloomin' onion, by the way.
They are delicious.
Bloomin' onion with that.
It's been a long time since I had
Frank, you're making me hungry, Frankie.
I know it's getting to be it's getting that time. Well, maybe Tim, that'll have to be your treat to us one of these days.
Yeah. These pretzels are making me thirsty. All right. What you got next?
All right. Let's look at a little breakout play on CSTM. Walking back into resistance, right? Pushing through earlier in the week, little 2-day consolidation. As it currently stands, I love when you see this, because it makes it a fairly easy stop loss, right? As far as where I'd want that stop loss, I'd get in basically above this weekly high here, putting my stop loss, making sure, number one, it's below whatever the low of this little consolidation is. As of today, that would be the 2-day low that we're seeing here. Line that up with the 9 EMA as well. So we're below the breakout channel. We've got the 9. We've got a little intraday support to work with from a stop perspective. We've got some room to run into that $20 marker. Maybe it's more than one swing to get us there, but there's not a lot of resistance until we approach that $20 range. Just a little breakout. Did me a favor, took a couple days off, didn't break and run like some other things. Could I sign you up, Tim, for a breakout here on CSTM?
All right, I'll give you my first instincts. Back up a little bit here, Maddie, when I look at the total context of it. I mean, I see the technical levels and even not on the weekly. Stay on the daily if you can for me. That will give it some context on the weekly. But see how so many overlapping candles, inside range candles, dojis for 2-3 weeks in a row. So part of my instinct, and I might have a bias on this, Frank, I'll admit my bias, is I kind of just I have a meh reaction to the breakout, even though it's clean, because I see the past history and the characteristic of a stock that can get stuck and rattle back and forth. So it would lead me to really a conclusion that you either position traded or you don't. I think swing trades on a company with that kind of personality can end up being tough in that regard. But how would you respond to that, Frank? Because that may be a bias I have about looking at the past history, seeing all that rattle and all that chop, and discounting the breakout here.
Well, I think it's a fair analysis. You don't have to trade everything, right? And you can't trade everything, and you have to disqualify some things for one reason or another. So, I'm never going to try to sell anybody really, I'm going to pretend to, but no one ever really has to tell me why they're not going to buy or sell something. That's your money. So number one, I do understand on that side of things. On the other side of it here, I would argue that a breakout is a breakout. In this particular case, some of these other breakouts that we've seen, what was right around the corner, resistance of some sort. Would you agree with that? Some of these breakouts that you're looking at that just were kind of choppy, bland, and I agree there were somewhere there, but I think maybe one reason for that was there was a lot of history on these guys. We had a lot of resistance levels. We'd win one fight and be right into that next one with no time to catch our breath. In this particular case, I would argue that this is the first time, at least in a while, that we've had that breakout opportunity where we win this fight and immediately we're slapped by somebody else. We got to get right back on our feet and get going. Here we have a little bit of room to swing if we want to do so. So that would be my counter to the choppiness of the breakout.
And that's fair. Yeah. It had to fight through some of those long-term levels, and it does look much better on the weekly chart from my perspective. Matt, what's your read here?
Technically should chop into about $20 over time from a technical perspective. But for me, it's really simple. We're talking about an aluminum company out of France. And the only thing I want to do is switch this chart to look at an aluminum company out of America.
Well, Alcoa is already rocking and rolling, right? We already got that move. You got to wait. We got to wait for a pullback or some new development, right?
I don't.
Listen, are you telling me you're going to be patient?
I'm telling you, I have severe concern over economics in Europe versus America.
Fair enough. All right, Mark, this one is for you. This is our old friends at Chewy, CHWI. And this is a sell. This is not a buy. I wouldn't buy this. If you
this is interesting. We've got to pause for a second. You haven't had a sell in Frank's chart section for a very long time. So this is kind of, I'm trying to remember the last time you brought a bear chart for this segment.
Yeah, it's been a while. There's not been a lot of great bear setups, right? Everything that's been bearish has either been too extended. I mean, there's not been a ton of great bears. No one needs me to tell them that. So
the bears were quick on violations of support, and then they stuck the 200-day moving average, and it became a very difficult shorting environment.
Exactly. And that very well may be the case here on Chewy as well, because of how we've seen these things snap back, right? But a couple of things I really like about Chewy on the sell side. I mean, obviously, number one, you can kind of see the break. This was a huge price point, right? This was a major breakout.
70s major.
I mean, that was major. We broke out of that thing, and it was party. I mean, we just flew well past $100. Ends up being support, breaking through that support here today cleanly over the last 2 days. That's also pushing us currently below that 50 weekly mark, which is always a benefit, right? We didn't even, we're not, at least as of right now, haven't even put up a fight here. We've got a little 2-day floor that's kind of developed here on the intraday, right? So we'd be kind of looking at that breakdown as kind of the signal to the bear side. We can go a lot of ways from a stop perspective, but I think no matter how we're going, we want to make sure that our stop loss or exit plan, where I'm throwing in the towel, is back above that $70 level that's been so historically important to this chart. So however much further beyond that wouldn't really bother me, just probably depending on how you like to roll with your stop losses. But I do think I would want mine at least above that to kind of give it a fair chance to see if we have some downward movement. There's not a lot to hold these guys up, right? I mean, maybe 60 as a support level. I don't know. Not a lot of great history, right? From a price action perspective. So If I'm looking for a bear and I feel like I need to add a bear, I think I could do a lot worse than a Chewy here.
Yeah, I certainly agree with that. And 70 is the number you're looking at here, Frankie. Historically, multiple times it played a role over here at 70, came back, snapped back, a little bit more of a Cody special here, snap back coming into the 70 to confirm before you had that nice leg up in Chewy. Technically, this fits a short. There's no doubt about that. Violation of 70 with momentum. And when you're talking about stop loss placement on a violation of support that has yet to occur yet, I always go to the breakout channel. That's just me. If I'm looking to short under 70, I want to stop loss above 70. Make it very simple there. Keep it simple. You know how that works, right? The KISS method. And then you're obviously looking at that next support level, which would be 60. T2 in this downward movement of price, you would think 50. No, you got a support level slightly north of that at 52. So you would expect a little bit of slowing momentum on the next leg, but to me, that's to 60. That's a good short. And also, like Chewy fits the entire philosophy of growth right now. Growth was beautiful in 2020. Growth is not in favor in 2021. And a lot of these stocks that pre-pandemic went from $30 to $120 and saw 400% price appreciation. Well, we knew fundamentally this wasn't real, guys. We knew that. Now you're seeing the puke back up. So it does fit fundamentally. Technically, it fits too. The response has been very negative throughout all of this. It tried the battle at the 200-day. Now, if you were battling here, what are you battling now?
Well, and that's the thing.
This is the time you capitulate.
Yeah, I mean, this is the thing. I mean, you've had lots of reasons why you might want to buy, right? We're trend traders
here. Not under
the
200 though.
Yeah, exactly. We bought the bounce of the 200. Heck, we might have been thinking the bounce of the 50, but we're not even getting that, the 50 on the weekly, I should say. So all of the reasons why I might buy from a perspective, I like Chewy. I'm a long-term, buyer of Chewy. I just don't have it. Why would I buy it now, right? And so that's always how I like to think about breakouts and breakdowns is, why would somebody else buy this right here?
You're regretting buying it here, and here. You need to go to therapy at this point.
Oh, you're not happy
about anything.
No. You're not happy at all.
No, this is the time you capitulate. You tried the 200-day moving average bounce. It did not work. It got violated. And now you're talking about an entire space that is out of favor right now. Right? Yeah. That these high growth, high multiple type companies that went gangbuster last year. I'm sorry, when we're talking the names we've been talking this year, industrial, finance, energy, basic materials, cyclical, Chewy doesn't fit into that. They just don't.
It's fallen out of favor from a theme perspective. The trend is ugly. You got a negative price reaction here at the 200. I see it. Who's going to argue that?
Price can do anything.
Yeah.
Sure. Yeah.
But if you're looking at it, price can do anything, and you understand why technicals work the way they do. You tried here, you tried there, you even tried a little bit here, and it just has not worked. That's capitulation.
Sure.
I'm done fighting, guys.
Yeah.
I give up later. Holler at me after the summer.
Yeah, I'll check you after the fall or after the summer. Exactly.
Yeah, that's right.
Call me in August.
Right. Exactly. All right, Tim, I know we're up against the clock. I'll do two more quick ones because I can't end on a bear. That just doesn't feel right. So I am going to go to a Cody special style in Rollins, ROL. Been reversing, showing some nice characteristics, bottoming, getting trend back on track, broke above the 200-day moving average last week, ran to very predictably resistance level, the last pivot from back in February, pushed us back down. This was more Cody special, at least in the speed, right, Matt, where it happened, snapped right back to that 200-day moving average, which is not too terribly far off of, maybe an ugly trend line that you could potentially draw on these guys. I think there's a couple ways we can think about a Rollins if we're interested. One, if we're wimps, we can just wait for that 38 break.
I like it now. Like you can wait for that.
You can wait for that break.
There's nothing wrong with that.
Agree. That's a wimpy style, right?
I
Yes, it
do
would be
like a
so.
little. I do like a little scale in front running
Well,
as
that
we
would
do this, though.
that would be the second way, right?
Yeah.
And I would agree with that. You know, do the 1-2 approach,
The
scale
1-2
in on the
scale
pullback,
in, and then
add
you
in on the
add to
breakout.
38. Yes.
Could we have room into those, you know, into those low 40s, right? From a resistance perspective. So we still have room on the break. Or, you know, 3, you know, we could just say, hey, we've got the trend going. It's not shocking. Who's surprised that pivot acted as resistance? Anybody?
and
I mean,
Frankie,
come on.
That's my point here. You got to love a stock that performs technically the way it should, right?
Exactly. Yeah,
And
makes
that's
perfect sense.
and we talk about the consistency a lot. We love consistency in price action. When you're looking at this stock here and you're seeing this, you are absolutely talking about this being overextended. 100%. You're running from 34 and a half up to 38. This is not a stock that likes to run like that. You're overextended on the breakout of the 200-day moving average, and you're saying, what? Well, where could this find that target? 38 stands out a ton to me. Stands out.
Right.
Old resistance, old support, old resistance. That 38 handle means something. And so when it comes into 38, as you're overextended post earnings, it doesn't shock me that you see a little profit taking off this type of response. And where does it come into in that profit taking galore? Well, where it comes into in a decreasing volume scenario, mind you, increasing volume on the upward movements in price, decreasing volume on the drift. You obviously have the increasing volume post earnings, but in the downward movement in price, in this Cody special, snapback, bullish retracement, however you want to consider that type of price movement, I would call it a flag-based pattern, but however you want to consider that, look at the contracting, decreasing volume there in the sell-off, and then you come into the support handle right there, hammer candle, double dip test, confirmed today. You got to like this technically, and that's why I say I do like a little front-running scale-in approach where, let's say your standard, and I'm just going to make the math easy, let's say your standard position is 100 shares on Rollins or Rollins.
Right.
You're going to do 100 shares. Well, I like 50 here and 50 above 38. Basically, it would be the very basic way of scaling in approach, right?
Right.
And so I do like that, but I like it because of the consistency here, right? I understand the chop here, a lot of volume around earnings. I understand that choppy wiki mess. Okay. So I'm discounting that given the fact that it's around this volatile historical moment, right? But you come into 38, it's sold at 38. It should have sold at 38. Profit taking should have happened at that point. You know, profit taking did happen because you have a fairly substantial decrease in volume in these downward moves in price. Again, that is a signal of profit taking and not institutional selling, not shorting. It's just the people that made money in this run are locking in a little bit of a profit, driving the price back down into support. Where is that support level? Right there at that 200-day moving average. And so I do like the consistency here, Frank. And because of that, the importance of that 38 handle, and the reason I like this so much is the importance of that 38 handle and how it has played a role historically. You scale in on the bounce, you add in on the break, and you watch it run to 40-42.
I like it. You can sign me up for a 42 run. Absolutely. So very nice. Tim, Mark, anything you'd like to add there?
Volume characteristics are really good.
You know, Matt, you know, when like a basketball player like just can't miss. Matt's in the zone today. Like
feeling good. Feeling good.
I'm not afraid to add if if I have something to say. I'm not afraid to, you know. I don't have anything to add.
Yeah, you don't got anything to add. You don't got anything to add. So
I'll take the compliment. We shut the lights out. And I'm shooting half-court shots. Okay,
there you go. There you go.
Let's go.
I'm Penny. You're Shaq, right? I'm just tossing alley-oops to you.
Just toss. Right. I'll dunk.
There you go. All right,
I'll take the compliment.
You deserve it. You deserve it. Okay, we'll do one more, and then I know we got to get out of here. And so since there's only one more, let's go with Schwab, SCHW. Little high base breakout. Nothing fancy here in the financial space. We all know what's going on over there. Little high base breakout develop over the last week and a half here on Charles Schwab. Nothing fancy, right? Either like high bases or you don't.
Everybody likes high bases, and if you don't, you need to learn high bases. In momentum markets, high bases are the number one pattern, in my opinion.
They're definitely up there. Yeah, it
well,
either bounces off nines or high bases.
Think
right?
about the psychological difference between a retracement and a high base. In a retracement, people are looking to lock in profit against the previous upward movement in price. In a high base, nobody dares sell because they think it's going to go higher. I like high bases, right? That mentality, I like those high bases. Not the cleanest high base, I would say. Little choppy action here, but you've had it held up really, really nicely in the face of Tuesday, right? Whereas you saw the NASDAQ, S&P all start puking up. Charles Schwab held up very, very nicely. Only a doji candle on that nasty day. And so when you look at the price action this week, you're like, oh, it was really good. Well, when you add some context to what happened on, Monday overnight and Tuesday morning, yeah, you got to like it a little bit more. The only question is, where's your trigger here? I like, and when you're looking at it from an intraday perspective, we'll drop it down into a 30-minute chart. You do have a trigger above 71.65. You could take very aggressively. And then you got the wick chop between 72 and 72.16. It's just depending on how aggressive you want to trade the break. But the high base analysis is legit and spot on. And this breakout's pretty decent.
Yeah.
Yeah. And Tim, I lied. I got to do one more.
That's
I lied.
I had Schwab on my list as well.
Okay, that's fine. But we can't listen, we just started giving me some compliments and now you're having me analyze bank stocks. I mean, I kind of feel I'm being used and dirty a little bit.
Well, you are. I forgot this one though. This one was on the one I wanted to make sure I looked at, especially when Mark showed up. So I got to go with Otis, OTIS, and then I will shut up. I promise.
See, I'll take an Otis high base over a Charles Schwab high base.
I will too.
That's just me.
I will too. Look at that hourly and the consistency there, Matty, that's developed after that big pop and run on earnings. Very clean floor, very clean ceiling over in the industrial space. Obviously it's killing it right as of late. So another little post earnings high base break. I mean, what else could you ask for out of a earnings run like that, right, Matty? That's exactly what we want.
This is what you're asking for.
Exactly.
Like literally, if you were analyzing this gap, I guarantee you would either said, let's see the next pattern develop, or let's see if it will fill the gap and look at that as a retracement. Well, we saw the next pattern develop. It gave it the consolidation. It allowed the 9 EMA to catch up to it. You got a very clean trigger above the high base channel. A little bit slightly better trigger, in my opinion, on Otis than on Charles Schwab.
Agreed.
Different companies, but same type of pattern. One more point of why I like Otis a little bit. Two more points why I like Otis a little bit more than I like the high base on Charles Schwab. Otis is an industrial company. Charles Schwab is a finance company. Both are hot in the market today. We all know which one I would lean towards, though, when it comes to choosing banks versus choosing industrial. I typically lean to the industrial side of the equation. But more so than that, in Otis, you have momentum in trend analysis. Pattern analysis is very similar between Otis and Charles Schwab, but because of the earnings response to Otis versus what we were seeing in Charles Schwab, you have a little bit of an upward movement of price, but I would not call this momentum. I would not call this momentum. You're not seeing any more momentum in terms of your support to your resistance as you saw back in these movements, or in these movements. And so you like it, but I do think you like Otis a little bit more because you have more momentum given the fact that you had a very positive response to the earnings numbers. I expect Otis to break out. I expect Charles Schwab to break out too. It's which one do you personally lean towards? I like the momentum in trend. I like the consistency in the resistance channel on the intraday just slightly more. It's not a lot more, just slightly more than I like what's happening on Charles Schwab.
I think I would agree with it. And yeah, I feel like I've not got enough charts the last few weeks with earnings, so I'm just lobbing them out there, right? I'm old charts from the last 3 weeks.
Hey, we're 2 hours. What are we? 2 hours and 10 minutes into halftime report. We might as well just do the scouting report live on YouTube here. And every coach is like, Matt, shut up right now. We are not doing that. And no, we are not doing that. But
listen, I'm game, Matt. You know I'm game.
Listen, I would do it. you and I would do it, but. No, I do like the coaches
sure.
having the ability to talk extremely open. And sometimes when you're in a live setting like a YouTube channel, you put the educational hat on, or you put the I better not say these words type thing, right? You don't want to offend anybody out there. You want to be, all that. So I do like the raw nature that the coaches bring in a private setting. But
well, you can't live on YouTube, right?
No.
I mean, you could try, but
wait a second. Challenge accepted.
There we go. A 1 week marathon. One of these days.
Challenge accepted.
Like
Frank and me,
telethons.
24/7. We're not getting off YouTube. No, I'm kidding. We're not doing that.
That's funny. By the way, if you are,
you'll get a lot of Warcraft and fantasy football talk if it's nonstop.
And movies and all kinds
movies
of stuff.
and entertainment and
absolutely.
politics.
You get a little bit of everything.
By the way, if you are looking for more live content, we're going to start wrapping our show up right now. But Mark is going to be going live here in about 20 minutes with his weekend wrap for the pro members over at Tackle Trading.
We've literally never had a Friday show where we literally said in 2 minutes, but we're on pace.
I had things to say today.
18 minutes from now, Tackle Trading. We're going to be doing Commodity Report live and Mind of the Trader at the closing bell. Where we analyze, basically answer questions, last second trade ideas, last second trade adjustments, but that happens in 18 minutes for pro members and you can find that on tackletrading.com.
I'm back on the ES for just 2 minutes here, Matt, while we wrap up and give final thoughts for the team out there. But a fun week in the markets, a lot of action back and forth. Interesting as we're watching two of the indexes hit into all-time highs, like the S&P 500 right now at an all-time high heading into the end of the Friday session here. Frank, you first here. Final thoughts for the team out there.
We're out of earnings. We still got the stragglers, right? So don't forget to check. Don't forget to think about how that can impact your management going forward. Continue to roll with the themes of the market, right? Where's the strength? Where are the setups? Nothing crazy, right? I mean, it's just another exciting week, even more exciting because I don't have a whole bunch of earnings to dread. I really did. I woke up with a spring in my step, knowing what was coming my way today. So, but yeah, have a great weekend. Happy Mother's Day to all of you mothers out there. We love you. We appreciate you. As sons, we probably don't say it as much as we should, but I promise we think it.
Absolutely. I'm glad you remembered that as well. Mother's Day coming up on Sunday here, guys. Matt, final thoughts?
Did you not remember Mother's Day?
I did remember literally 2 minutes ago. Hey, listen, I'm focused on a different anniversary or event right now. It's my 15-year wedding anniversary today.
Congratulations.
Congratulations on your 15th, but don't forget Mother's Day as well in 2 days.
Did you strategically get married so you could two for the gift?
Of course you did. This is, of course, something Tim
does.
does.
Such a Tim thing to do.
That would be a smart.
I'm shocking it didn't line up with her birthday. Like
you
literally.
met my wife.
How do we get them all?
My wife. Do you think I picked our wedding date? Are you?
That is true. That is true. If it wasn't for that, I would think that he did. But yeah, I believe you, Tim.
That was a good point.
Matt, final thoughts.
No, I'm still on your wife picking, and you're right. You're right. There was zero chance you had anything to do with the date, the day picked. So not giving any credit there, but no, last thoughts. You're coming into a week, and you can only ask for things in the market, and whether it gives it to you, it gives it to you, right? But this could have been a week that we were talking about a vastly different story. And if you remember on Tuesday, everybody and their dog was talking about inflation and a redo of this type of methodology right here, right? Inflation sparking, bond conversation, growth puking it up. And yet, literally on Tuesday during the halftime report, as we were breaking down this analysis with our team, we were saying this is not what is happening. This is not what is transpiring today because, you're seeing that storyline play out in the NASDAQ, but you're not seeing that storyline play out in the other marketplaces. You're not seeing it play out in the cyclical movement. You're not seeing it play out in the bond market. You're not seeing it play out the same way it did when we went through this storyline the first time. And I hope that people at Tackle, as they come here, that level of analysis helps them navigate and helps them overcome some of the nonsense that we do see in the traditional media as they irresponsibly report price action on a daily basis and try to sell articles and blogs and all that. And I don't fault anybody for doing that, right? Everybody's got to make money. And, we live in a capitalist society, and that's all fine and dandy. But I also just hope that our community and our team, that they can get the information they get on a daily basis and take action on it with confidence. And none of us have the crystal ball of what the market is going to do, right? We don't know what is going to happen on the futures market on Sunday. We don't know what's going to happen to the cash open on Monday. What we do know is probability analysis. That's what we do know. And when you have an environment very similar, not the exact same, but if you guys will remember right here, okay, as we were going through this week, how many times did I talk about the quality nature of this technical pattern and the quality nature of multiple time frame analysis lining up? And when that broke out, talking about how this could be another leg up, not a little bit of a fade, but a traditional leg up in the market, and we got it. And now we're through earnings. We've consolidated all through earnings. We're now on the back half of earnings. And in other areas of the market, once we got through earnings, what did we start seeing after earnings in the financial space? After earnings in the financial space, during earnings, everybody's saying, why are we not going up? What is going on? Have you seen these numbers? Have you seen the EPS numbers and the beats that are happening in the financial space? What are we seeing? We're seeing a little bit of profit taking. Well, post earnings, you saw a nice leg up, a traditional leg up. When you're talking about the energy space, right? You're talking about a market down here as they start reporting earnings here. Very choppy price action. You get through earnings, look at the price response once you're through earnings. Look at EOG just today. EOG reports 2 weeks ago. It is not doing this. Not doing this. It is doging or fading down. That is what it is doing if it is reporting before Conoco, Exxon, and Chevron. And sometimes it's a bad thing to report after them. This time it was a very good thing, because what we're seeing in the market post earnings is once earnings in a space has been done, we're not focused on earnings at all. Now it's time to rock and roll, because like I said, throughout this entire earnings season, guys, we're justifying all this nonsense here, right? How many times did I say that? We're justifying all this nonsense here, all that price appreciation. We're justifying that so that we can do it again. And now we're on the back half of earnings, 9 to the back half. We're almost done with earnings. We only got 15 S&P 500 components reporting next week. Now we're starting to see the breakout here. Things are starting to get a little bit more clear from a multiple time frame perspective. The week that was, we're only up about 20 points in the week, guys. We don't have a tremendous amount of momentum from a weekly perspective. However, with the context in mind with what this week could have been, now we're post earnings, you're breaking out of that 4,200 handle. That is most likely going to confirm in the next hour and 10 minutes. I haven't seen anything happen recently. I mean, this is the market since the halftime report, guys. It looks like they've already taken the weekend off. Yep. It does look like we are going to confirm above that 4,200 and that 4,210, 4,220. We know the zone between 42 and 4,220. Looks like we are going to confirm. I like that going into the market next week. Hopefully we get a clean futures market open on Sunday, and we see some continuation of this price movement on Friday coming into the Monday cash open.
I love it. I love that final thought, and appreciate all the insight there, Matt. And by the way, if you want to be fully prepared for the Monday open, you should probably become a pro member at Tackle Trading. There's several things we do over the weekend. We put our newsletter together where we give all of our analysis behind our rankings, commodity report analysis, Forex market analysis, stock and options reports as well. I just dropped a link to the 15-day trial. If you're out there, you're watching the show, you're not yet a pro member, easy time to join us and come on the back end and become a pro. Great job this week, Team Tackle out there. Appreciate you guys as always. Frank, Matt, fantastic today. Marky, good luck with your show here in about 9 minutes. Everybody else, have a wonderful weekend.
Team Tackle, you guys are the best. Love you guys. Have a fantastic weekend. Check out those reports. Do your weekly job. You got a job to do, right? You got to prepare for the market every week. That's the newsletter. That's to get the macro analysis you need to navigate the markets, get ready for the markets next week, and then your scattering report, stock, options, currencies, commodities. Make sure you're prepared for the market next week. And then obviously we'll be with you all next week to break down all the action next week as well.
Fantastic. See you guys
On.
next